All right. Lot of energy talk this morning, I say on Twitter.
Yeah, so O'Hare and I were just the genesis of this room. This is ad hoc, out of character. O'Hare and I were just talking offline. We couldn't deal with the crap on FinTwit this morning. There are other couple rooms going on, and we're just like, enough. Let's just do our own room.
Yeah, I mean it.
So O'Hare, you're kind of the driving force behind this room. So why don't you run with it for a while? What do you want to talk about? Where do you want to go? I
Well,
got a lot of stuff we can talk about.
yeah.
What direction do you want to go in?
Well, I think we just pick up where we left off with regard to like a lot of talk around energy right now. And a lot of these energy stocks, and everybody's become. We went from no one wanted energy to literally they can't get enough energy, and I think it's a slippery slope because if there's a hiccup in oil prices, and it's inevitable, there are a lot of people out there that are going to get hurt because a lot of these names, especially a lot of the Canadian names, are very much levered to any incremental rise or fall in the price of crude. So, where I was just looking, like, for instance, the other day, crude fell, all these names got, they were down 6, 7%, and Exxon and Chevron were up actually on the day. So they don't understand how levered a lot of these names are. So I think that's kind of where we should pick it up.
So to that end, let's be very clear. In the room that you and I were both in a few minutes ago, and someone asked the question, what to do with energy stocks? I said, look, structurally, if you were bullish energy, and here you and I may disagree on this, but that's fine, doesn't really matter. It's more about trying to think of an intelligent framework in which to operate. If one had been bullish on energy, and if one, had a fundamental outlook to be bullish, and I was very bullish, but as you and I both spoke, I get no credit for yesterday, neither do you. Shot clock gets reset to zero every day. And we shouldn't get caught with late recency bias, and we all think these companies are good managements and they're the greatest since sliced bread and blah 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 blah. Today's a new day, and I've been around long enough and made enough mistakes to know that I just don't know. And right here, right now, I don't believe you were in the room yesterday, but we had a great space. Tommy Thornton, as I was telling you earlier, great technician, chartist. He was referencing the daily sentiment indicators up at 96. They've only been at this level, I think, four times in the last 20 years or thereabouts. And this is just not a good entry point, even if you're bullish. And I prematurely, took that. I mean, I got cautious a little bit in December because of Omicron. Then kind of fade, and I was public about that. That kind of faded away. Then I went back in, and then 2 3 weeks ago, like these things are starting to stall out. Blah blah blah. The fact of the matter is, energy was churning, and then along comes the horrible Ukraine situation. And so I just think right here, right now, I mean, I happen to be very bullish longer term. But right here, right now, the question I asked you all here, okay, if you had $100 million, what would you do with it? And you don't have to, that's a rhetorical question, not a literal question. If you had a new account, would you put it all to work now, even if you're bullish on energy? Like that's a tough ask. And I think you agree, and we were discussing in the room, God forbid, let's hope that Putin gets taken out, or there's a peace, there's a truce, or there are negotiations, or whatever. I mean, you could have the market up thousands of points, energy down 20%, and the much hated Kathy Woodstock's up enormous. You could lose like 20% just like that. So my point, it's not about is energy a buy or a sell, because everyone has their own opinion about that. I just think even if you're bullish, I just think it's a bad entry point right here, right now. So now someone's going to run away listening to this. Say, yeah, I heard George. He's fighting with Cuppy and blah blah blah, and he's bearish on energy. Fuck no, I'm not bearish on energy. Go look at my Twitter history. All right, but the problem is it's a timing question. If you say to me, hey, you know what, George, all the short term stuff you and I here are talking about, I believe in energy. Blah blah blah. It's going to be a lot higher a year from now, up 100%. Which, by the way, I happen to believe. Don't bother me with this short term nonsense. Fine, then ignore everything we're going to talk about. But on the other hand, if you don't want, if you're worried that you don't want to run the car in the ditch, you could lose 10 20% pretty quick. Maybe this isn't the best entry point. So I want to be very clear how I catch it. It's a question of time frames. But getting away from energy itself, I mean, that's a good launching off point out here. Maybe we could expand that because you run money, you're a pro, you've been at it a long time, you got tire trucks on your back just like I do. As you sit right today, right here, right now, and maybe you want to speak in terms of time frames as well. As you look at the market, it could be the market, not just energy in particular, but the market more generally. If someone gave you $100 million, a question I asked you on the phone a few minutes ago here, $100 million right here, right now, and they're not going to measure you daily or whatever, but it's medium term investor, whatever. If someone gave you 100 million right here, right now, what would you be doing with the money? Would you be partly invested, fully invested? I mean, would you be long? Would you be short? What sectors would you focus on? Maybe I just want to get into your head and understand like how you're thinking about the market right now here.
Yeah, that's a fair question. I mean, and that's the question that you posed to that individual that was in that other space. And a lot just to back up, a lot of people have gotten the idea that you know when they've made some money and they're right, that it's just going to continue to be this way, and they're going to continue to be right. And if they're right, they must be good. And those two don't equate. Sometimes you're just right because you got lucky, and that's another thing. People don't like to admit. You just happen to hit it at the right time. And so, right now, if we have say you brought your money over, you said, "Hey, Conrad, I want to give you 100 million." I would say, look, you know what? We're going to have 20-30% in cash. I do believe cash is king. A lot of people, famously, Bill Gross said recently that cash is trash. I mean, this is an expert investor. He's been in it 50 years. I look up to him. I think he's a great, he's had a fantastic career, but he was saying, cash is trash. And I believe cash is probably the way to go right now. So 20-30% in cash is not an outrageous ask. I would be putting money into some select media names, old media. I would be putting money into the fertilizer stocks. I think they'll continue to do well. If you have energy exposure and you're heavily into energy, I would hedge it. And I would either hedge it outright, or I would use areas of the energy market that people aren't really looking at right now or focusing on, which are like the refiners. I think the refining stocks are going to do very well over the next few quarters, potentially the next couple of years. Their margins are only going to get better as the price of crude stays high. It doesn't have to go to 200. I mean, some of these rooms, George, as you know, some of these guys have been calling out, $200, $300 oil. It may very well happen. I mean, we saw $147 oil. I'm not saying you couldn't see $200 oil. That could happen. That could happen quickly. The problem with that is when you have these kind of spikes, it's just they give it all back. I mean, you have massive spikes and then they have a big retracement. They don't typically stay elevated. Now, this price here, I said a few weeks ago, if oil trades between 80 to 110, I think that's kind of the sweet spot. That's good for everybody, right? That's going to be good for the refiners. It's going to be good for the exploration companies. It's going to be good for all the inputs, Halliburton's of the world, Schlumberger's. So everybody benefits with oil at like an 80 to 100, $110 price. As that price goes higher, you start having knock-on effects, economic effects. So like you said, going back to like $100 million today, if you had to put it to work, it certainly wouldn't look like $100 million you put to work, even a month ago, right? Because again, energy has moved tremendously. A lot of these names, specifically, and I hate to say it, a lot of these names that are the smaller names out of Canada, that a lot of these guys are talking about, they're highly levered to oil. So when the price of crude goes up a couple, two, three, $4, $5, the stocks can go up 20%, right? This conversely, if the price drops as it did the other day, albeit temporarily, a lot of those stocks get hammered. And so, to your point, George, if the price of crude were to come in, say 20, $30, a lot of these highly levered names, could potentially lose, half their market value. I'm just
Yeah.
saying,
So
I think
yes.
it could be a disaster for these guys.
Yeah. So that's fine. I mean, we just want to be very clear here. So I think it's fair to say that short term, you and I both agree like now's the time not to be putting money in energy. We could be wrong on that, but we agree on that. I think longer term, I'm probably I am more optimistic than you are in energy. But the point is, and listen, we all fall victim to FOMO. I do it, you do it, we all do it. All right, and it's kind of like this reminds me of here. Remember that famous story with Stan Druckenmiller? He's far smarter and richer than this
You
old
mean
little
in
person.
99, 2000?
Exactly.
Yeah,
Right. And he
yeah.
even talked. Should watch his YouTube video. It's hysterical. He talks about it now. Here it is, 20 some odd years later. And I knew a guy that was working for Stan at Soros at the time. And they get the fourth quarter of '99, and it was October, and he just couldn't take it anymore. He was missing this huge party. There's nothing worse than missing a big party. So Stan goes in and buys the shit out of the tech stocks. And, he's a pig. He's a momentum guy. He's a pig. Great investor. If there was a Mount Rushmore for hedge fund managers, his face would be up there, and trade starts working, and you get into like February, March. I think tech peak first week of March 2000, and it all goes the wrong way, and he just gets blown up. And I marvel, and this gives me a chance to tell that story again. It's one of my best stories. People talk about what is a bubble. It's a term that's thrown around excessively, in my opinion. The real definition of a bubble, the best definition of a bubble I ever heard, is something that changes human behavior. It induces people to do things they wouldn't have done otherwise. So, tulip bulbs are going to the moon. You get FOMO. You got to get in because nothing's more galling than the guy across the street, your neighbor, making money, and you're not making money. Nothing's worse than tech stocks going up. Nothing worse than Kathy Wood stocks going up, SPAC stocks, right? It's like stuff you would have never bought if you were in a good place. But FOMO sets in. So Drucker Miller, one of the best fund managers of all, head fund managers of all time, buys tech stocks, makes money for a while, and then blows up when the market tanks. Eventually, wound up closing his fund. He was working for Soros, who then went and started Duquesne, whatever. Actually, been running Duquesne alongside, but don't worry about Stan. He's got billions, so he's done just fine. And Julian Robertson, this is hilarious. Shows how screwed up a bubble can be. And I don't know if you've heard me go on this rant before, Conrad. And I want you to talk. So you have two guys, Stan Druckenmiller and Julian Robinson, both would be in the Hall of Fame for best investors ever. And one went long tech, that's Stan, and the other went short tech, and they both blew up. Why? Stan, because he came in the eighth inning of the game, just when they were about to, the bar was about to close, and the cops were going to show up. And Stan, sorry, Julian, because he was bearish the whole way up, and he got carried out. So here it is. You have two of the smartest guys out there, most successful guys out there, both getting blown up by tech, one long by a bubble, one long, one short. So who in God's name? Oh, here, you, me, everybody in this room. Just who the hell do we think we are? Okay. When you're getting into bubbles and bear markets, I mean, it is so freaking hard. And it just bothers me. I almost put up the other line I use a lot, which is I know I'm not young enough to know everything. Again, I'm not young enough to know everything, and I say that not to insult the younger folks in the room. I wish I was younger. I was young once, but there are some advantages that come with being older. You've made a lot more mistakes. And I've made a ton of mistakes. Oh, here I venture to say I've made more mistakes than you have because I'm older than you. And you learn from experience. And the sort of blithe ignorance, these know nothing FinTwitters who have only been in the market since 2009 figure this is normal. No, this is not normal. This is abnormal. And so I didn't put I'm not young enough to know everything as the title of the room. So instead I toned it down. I said, what will the market do? I do not know. This is a really hard time. And anyone who speaks with the confidence that they know, you should just leave that room immediately. And that, by the way, is the real essence. If Cuppy's listening or any of Cuppy's friends are listening, maybe have them come in because we need to clear the air. But that is what really pissed me off about the whole Cuppy craziness and his Russian recommendation. He's throwing shit against the wall. It's time to be reckless. It's not a question of he made a mistake. We all make mistakes. It's like, this is hard. We don't know. And you have people on FinTwit who are hanging on every word, what he says. And I mean, my God, like, there's just no place for this. There's no place for this. So I don't know. Here, let me ask you a question. So you've been doing this a long time. Do you have a view? As they say, your beliefs is your portfolio. They're not always the same thing. Now you may say, well, I have to be fully invested, blah blah, whatever. Okay. The question I want to ask you is, in terms of your view of the market, and everyone has feelings, even though you shouldn't trust them. From where you sit, sort of the overall scheme of things, in the 20 some odd years you've been doing this, on a scale of 1 to 10, 10 being most bullish, one being least bullish. Like, where are you? And then the second question around that, whatever your view is, bullish or bearish, what's the confidence or conviction associated to that? Is it 10 being high conviction, one being low conviction? So I know I'm giving you sort of a psychological investment proctology exam. You can do the same to me if you want in turn. But both in terms of bullish, bearish, and conviction, low conviction, 10 being high bullish, 1 being bearish, 10 being high conviction, 1 being low conviction. How would you answer that question?
Well, I would start by saying that question's a very broad question, right? Am I bullish the overall market or am I bullish the portfolio that we're managing? So I would answer by saying I am probably I'm in the middle as far as the whole entire market. I'm like a five, and my conviction on that is probably around a five. It's hard to say, man. This is a tough time because there's so many macro events happening all at the same time. The markets,
I have to interrupt you. I have to interrupt. So, just as Hillary Clinton was confused under the fog of war, is that what you're dealing with here? The fog of a bear market? Sorry, bad joke.
The fog. Well, listen. I mean, we've just literally been. We're coming out of the biggest bull market we've seen since literally 2000. I mean, in a lot of these names, it's just incredible. And I can tell you, I'll be the first to admit, we missed a lot of. We're value guys, so we missed a lot of these names simply because they don't make our screens, right? So when you ask the question, "Am I bullish or bearish the market?" I would say I'm in the middle. I don't know which way the market's really going to go. I tend to be a little more bearish than bullish. I think the market's coming off a massive bull run over the last couple of years, fed by the Federal Reserve. I mean, just with awash with just trillions of dollars in new capital coming in, new money. That's not going to go away it's not going to go away overnight. It's starting to. You're starting to see cracks. I mean, a lot of these names, COVID names, they're down 60, 70, 80%. I've been in some of your rooms talking about ARC. I mean, that thing is a disaster. It's probably going to 20 before, I mean, there's a lot of problems. And so specific to our strategy as value managers, I would say there's a lot of things out there in the special, and we're deep value, we're special situations. So we look at restructurings, we look at M&A, we look at just deeply misunderstood companies, right? And sometimes we're very early and it doesn't work out. I mean, I was in a space earlier today, briefly, and I think you mentioned the coal stocks. We were in coal stocks 4 or 5 years ago, and the coal stocks we owned all went tits up. They went through reorg, right? And now we didn't have a heavy weighting in them, but we ended up taking a bath. We were firm believers in coal. It just didn't work, right? We were too early. Coal is the thing to do now, right? With Russia and Ukraine, what's going on, and with this energy crisis, everybody's bullish on uranium and crude and coal. So you could be right and wrong on the timing, and you could be wrong and right on the timing. It's hard to say. Right now, we're
Yes.
kind of in this vortex, of
All right.
information.
All right. Here. I'm gonna let me go to round two. And again, feel free. I'm not trying to stick it to you, but feel free. You can stick it back to me anytime you want. So, as Peter Lynch would always say in the smart guy, it's a market of stocks. So I asked you a very hard question. What's the market going to do? That's a nasty question. So let's do it another way. Within the market, it's a market of stocks or groups, stories, sectors. So one of the problems you have with the market for a long while, you had this relentless rise in tech and the FANG stocks and active managers getting redeemed. All the money's going to passive. It's true that in the aggregate, active managers underperformed, but it became particularly acute the last few years. I know you did really well. You told me you're up 30. See, I do listen to you whole here. I know you're up 32% in 2016. So there. But market stocks. And so in terms of the opportunity set, I mean, life is not linear. Sometimes there's a lot to do, and so many ideas, so little capital, right? Like you want to go to the bet, you just don't have enough money to buy everything you want to buy, right? Other times you do your screens, there's nothing looks interesting, no news stories, it's like all tapped out. You just from a bottom up base, you just can't find much to do. So my question to you is, sorry for the rant, but I'm trying to set up the question for you. How does the opportunity set to you look like in terms of groups and stocks? Are you finding a lot to do, little to do, or medium sized amount to do?
It's a great question, and I think the best way to answer is, and this is, my partner Brian. He's been in the business 30 years. I've been in the business 25 years, 26 years. If the best thing we've learned over those years, if we don't know, then we're going to take a step back. If we're not sure, we're going to take a step back. And you learn that through experience, as you put it, pointedly. We've all have tire tracks on our backs. I mean, we've been run over a few times. You learn from those mistakes, and I think Right now, the fact that everybody's so bullish on one area, it scares us, right? Because if everybody is on one side of that boat, what do we do as value investors? Do we continue being on that side, or do we kind of slowly migrate to the other side of that boat? And I can tell you, we've been in energy for a long time. We started to schnitz a little bit off here and there. I mean, we're still bullish on energy. Don't get me wrong. I think this ESG, and by the way, I've been in some of your rooms months and months ago where I've mentioned ESG. No one was talking about ESG 6 months ago. I was pointing ESG out when spaces just opened. I said it's. I think we've topped ESG. It's peaked, and no one thought. Everybody was crazy because a lot of these rooms were Tesla rooms, right? Green energy and Tesla and Rivian and all the Neos and all of that stuff. So everybody was bullish on it. And I would come into these rooms and everybody point the finger and just hate on me because I would just say, look, people need to look at, this ESG thing's probably peaked and it's probably going to go the other way. And here we are 6 months, 7, 8 months later, and that's exactly what's going on. One thing I saw on Twitter this morning, which was interesting, somebody had tweeted this out, and I don't know who it was here. I'd have to look for it. They specifically asked the question on pension funds and how pension funds have been selling energy investments for the better part of the last 10 years and it's sped up in the last 5 years. The state of California, for instance, the CalPERS, CalSTRS, the UC system in California, Michigan, New York, New Jersey. I mean, you name it. All these pension funds out there, endowment funds out there, university, endowments. I mean, they've all been shedding energy names for the last 5 years as fast as they could because it didn't look good, right? So when they're going to meet when they have their investment policy meetings every year, and all of a sudden the CIO is being barraged with questions on why they own ExxonMobil or Chevron or Halliburton or Schlumberger or Occidental Petroleum or whatever it was, and they don't want that discussion. So it's better for them to just get rid of it and buy Tesla because that discussion is it's much easier. And as you know, George, you've been in the business a long time. Sometimes we say we drive the bus. A lot of times, the fact of the matter is the clients end up driving the bus. And if you listen to your clients too long, they may drive that
Yeah.
bus right off a
No,
cliff.
O'Hare, and that's a brilliant point, which maybe those who haven't run institutional money like you have don't appreciate, and that is, it depends who your client is. Is it you, or is it CalPERS? What's their risk profile? What's their time horizon? I'm sure there's a lot of stuff, O'Hare, you would do for yourself that you wouldn't do for a client, and vice versa. All right, let's just stop for a second here. So this was an ad hoc, hastily called room between O'Hare and myself. We just were like a little bit bummed out by some of the rooms that were going on today, and we just couldn't deal with some of the nonsense out there. And also, I got in the dust up with somebody on Twitter, and so there's no particular topic here. It's really meant to be a stream of consciousness. So,
Maybe we could open it up for some questions
yeah,
too.
yeah,
Yeah.
exactly. So whoever wants to get in there. So let's do Baron first, and then we're going to go to Don't Say We Didn't Tell You. Hey, Baron, what's up?
Hi, George. How you doing? I appreciate your time on Twitter as well as your experience and the information you provide. Thank you. It's very insightful. The so I've had a kind of a working theory of kind of what's happening, and to understand where we're going and kind of what to do for me at least, and for people that I communicate with. You have to come up with a theory of what you think is happening, right? And in order to do that, I've kind of come up with the conclusion from a number of sources that what's happened over time is potentially, and again, I'm just asking your opinions on this too, but I believe this is happening. No tinfoil hats, nothing like that. But the Fed, the Fed is about ready to hike rates and make that decision. The timing is very strange that uh, some things happened geopolitically that would enable them not to do so. And, and them hiking rates would affect the government's ability to pay down their debt, which they can't afford. If you then backtrack and say, all right, well, what would stop that? What would actually prevent them from hiking rates above 0.25% or so? That could be war. That could be lots of things, right? Conveniently, this war came about. I'm not going to say anything about that, but it did come about, and the timing is insanely crazy. Even Biden himself said, "We'll know what's happening 1 month from today, February 24th." Well, when does the Fed hike the rates, or actually announce it? March 24th. It is too ironic because for months I've been holding this theory, kind of sharing with my groups, 20, 30 people that I talk to on a regular basis, and I've been following cycle analysis since last year. Since around August, I started following some people who do psychoanalysis. I learned about it, and I'm no expert, so I'm not coming on here pretending to be. So please don't anybody hate on me. But let's say I'm an average investor, learned a lot in 2020, 2021. I'm following. I'm a scientist in life, and I try to observe and learn from everybody, and don't try to draw opinions too quickly, but let them form, and then identify and learn from history, as it happens, and then use history like yourself, people that like yourself talking about what's happened in history to identify what those in power do. Why has the market, as following psychoanalysis, it's ironic because there's a couple of people that have mapped this out on charts and have shown it's following it to the T. As well, at the same time, there are world events, media events, government, things that are happening in the government that happen to fuel the downside, right? And the timing seems to be very like this month. We all know this month, this last 1 month period, 1.5 month period has been very timely, very critical in what's happening. So from February 24th, when that announcement was made, and I said, you know what, I do work in Ukraine and in Russia, so remotely, so I know a little bit what's going on over there. But the worlds are at their weakest. Of course, if Russia was going to do something, they're going to go at it now. It's just opportune timing. Forget about the rationale and how horrible it is, but but the event itself. Are we stepping in to help? Are we pushing whatever we're doing? What is it leading to? And whatever it's leading to is the Fed doesn't have to hike rates. They get the excuse of, well, common enemy number one is Russia. We get to blame Russia on everything. If we have failed policies, so just throwing these things out there, if we have failed policies perceived by our people, by the people of the European Union, for example, the West in general gets to throw Russia under the bus, claim that's Russia's fault when the markets crashed. When the markets crash, collapse, correct, whatever happens, right, to whatever degree it happens, they then get to say, well, we can't hike rates now because, we don't need to. And we just kicked everybody out of the casino and forcing them back to work, albeit increasing stagflation possibilities, right? So people have less money, going to be spending less. Now the Fed gets to come in month after month saying, look, we told you it's transitory. But it's not because it's anything the government or the Fed did. It's because of the war. And when we go into an election year in 2022, well, what are they going to do? They're going to blame that. Now, back up for a second. Let's talk about energy. How does energy play into this? Well, it's really strange that when the US government and the European governments got together for NATO, the first day they were talking about Russia and what they're going to do. The second and third day, all they talked about was renewable energy and how we have to start spending money on the renewable energy. That was the huge, huge flare to me that I was correct. That this to some degree, whatever I'm thinking here is correct, that it's going in that direction. And these are the justifications and rationales they're going to use. Would it not make sense that they're going to drive energy prices up so much that, like using Russia as a common enemy, they're going to say energy is so expensive and we all hate it and we can't do anything about it that we need to do a spending bill. And so, you guys have to vote for these spending bills. And because rates are down low, we can afford to do more anyway. And now, how does that affect the market and our ability to make money in the market? And how should we invest based on that?
Yeah, so so you posed a question, but you obviously have a narrative, and how should I say this? I have a lot of respect for the narrative you posted. I'm not on even number days I agree with it, on odd number days I disagree with it. But yeah, I put it this way. Let's assume we get we're one and done or two and done or whatever it is. They've managed to get rates down the last couple of weeks by not doing anything, just open mouth operations, as they're called. If we get, and so it's a useful scapegoat now. Of course, we can't raise rates because the world's going to come to an end because of Russia. So it's the free halt pass. Which is why, going back to the beginning of the discussion, it's a very confusing situation. Not to cop out, but it's very fluid. I'm going to repeat, O'Hare was talking about how you have a lot of cash to start. I agree with that. I think it's not a time to be swinging the bat big time. I'll repeat a story I've told in this room a couple times, most recently yesterday. Dennis Gartman, who we're going to have in, I think, on Thursday. He tells a story when he was a young man trading in the pits of the bond floor in Chicago. This goes back to the, I don't know, late 70s, early 80s. And it's like a scene at a trading places. The market's up, down, up, buy, sell, buy. You all remember the scene with Dan Aykroyd and Eddie Murphy. I just love that movie. I can't watch it enough. So in any event, he asked his friend, well, what do you think? Buy or sell, bullish or bearish? His friend said, I'm flat and I'm nervous. In other words, if you're not nervous, you're not paying attention is what it boils down to. So you ask a question that's deceivingly difficult question to answer. I think it's a time for having less exposure on, and I'm a very aggressive investor. If you then think about how this will play out, for those that were in the room or not in the room yesterday, I strongly urge you to follow Michael Kantrowitz, Kantrowitz. He is, I think, the number one rated strategist. This Cornerstone Macro. They just got bought out by Piper Sandler. And he's making the point, and he's right. And he by the way, he is a guy you have to follow because he puts so much good stuff out there. And he's pointing to, based on the isms and all this stuff and surveys, economy's already rolling over, earnings estimates starting to roll over, blah blah blah, and that's gonna be a phenomenon which is going to take a few quarters to unwind. It's got to let it run its course. Analysts haven't even started cutting the estimates much yet, so there's a lot of, shall we say, lack of upside for the next few months, 12, 18 months. And for those of you that are more bearishly inclined as I am, that means it ain't going up, it's going down. So they can whiff on the rate increases, to your question, do one or two and say be done and blame it on Russia, but it's not going to stop the economic slowdown which is in place. It may well, I think equities are screwed either way, because either door number one, it morphs into a recession, earnings down, market down. Door number two, maybe not a technical recession, but really slow growth, still high energy prices, food prices, accelerating wage gains, squeezing on profit margins. So you'll be in this sort of stagflationary type of environment with heightened uncertainty, and that's also conducive to contracting PE ratios. I'm sorry to sound so downbeat, but I continue to consistently say that the stock market represents return-free risk. Return-free risk. It's a play on words. People talk about the risk-free return. And looking at the stuff from Michael K, where he's got all the numbers, that would bear that out. So I think, and then of course, so you can say, okay, George, that's great. I get your BS argument on the market overall. What about sectors? What about stocks? That's why when O'Hare was talking at the outset about there's certain it's a market of stocks. There are certain groups will do better than others, but I think it's a very muddled picture. It's a muddled picture, but with, I think, an asymmetrical bias. I think it's skewed to the downside. I see very little chance that the market's going to go up appreciably. I see a pretty good chance it's going to drop a lot. And so for me, the expected return is very negative. And there are certainly parts of the market where I don't think it matters what the Fed does. I think the Cathie Wood stocks are continue to be complete disasters. It's the gift that keeps on giving. The trade I've had on for a long while, I've talked about it a lot. I still would put it on here today, although not with the same size. Short the Cathie Wood stocks, long the energy stocks, and we can go on. So I think implicit in it's a very good question you asked, Baron. But I think part of the problem with the answer is the idea that, or when people ask the question, the idea that somehow the Fed can control the economy or the Fed can control the stock market. No, they can't. They can bias the economy, they can bias the stock market, but in the end, market forces win out. So, great question. Let's go on. We've got don't say we didn't tell you, followed by YS. We got Mr. Cullum in the house, and if he wants to speak and come on, that'd be great. I see your D points here. I'd like Gabriel to speak. He never talks. He's a smart guy. Marathon is in the house. Danielle, I love your tweets. I know you love my tweets. There are a lot of people, KFAB, there are a lot of people here who really would like to speak up because I don't like listening to myself talk. So let's go to Don't Speak, followed by YS. Hi, Don't Speak. What's up?
Hi, George. Thanks for the opportunity, mate. All I wanted to just speak about was to let people know that, as I said, I agree with the last person who spoke about the Fed can't raise rates. I don't agree that they can ever raise rates moving forward. And then just a bit of an insight is the environment that we're in will be a low returning environment for the foreseeable. That's just my opinion. And then moving forward is that you can invest across board. I said the world is big. It doesn't have just to be US stocks that we're talking about all the time. Like everyone has to go, oh God, we need to invest in US stocks. You've got the whole world to choose from, so you can always move your investments. So if the US stocks are shit, move, invest elsewhere, mate. Look for better opportunities and better returns. And then, as I said, that you can get a better outcome.
Yeah. So
That's just my
yeah. Don't Speak. Let me ask you. I sense from your accent you're at least not native born in the U.S. And so you're
no,
outside.
mate.
Yeah, no. So
Yeah.
you're in the U.K. or someplace. So let me ask you, what parts of what markets do you look at, which might be interesting to you, or what stocks might be interesting to you outside the U.S.?
Right now, I'm a China. Most of my stocks are based in China, so China based. As I said, whenever there's opportunity for growth, and then if you look at the population of the way I base it, like every country is like every single person. So you just look at the balance sheets of every country, and whoever has the least debt has the most opportunity in terms of growth moving forward. So I think everyone is just obsessed in terms of like the US stocks. As I said, they've been great for the past for whatever how many years. But as I said, what you're saying is true. We are going back to being a picker of stocks, not just buying indexes. There's a lot of people that just buy indexes, whether it be the
Yeah,
ARK
yeah, yeah.
index.
No,
But
I get that. So what markets or stocks outside the U.S. interest you, if you don't mind sharing?
at the moment, I'm into probably the oil stocks, the energy stocks that everyone's been talking about, whether it be the Canadian oil stocks. I've got some of them on my portfolio. And as I said, I'm more diverse than anyone else. So it's just I'm taking anyone that can pass off the inflation growth. So any company that's got a good balance sheet and then can pass on their prices. So whether it be PNG, all different type of stocks like that is my target for the moment. I mean, probably for the next 2 years. Anyone that can pass on cost to the actual customers and they've got a great balance sheet, that's the stocks that I believe people should be buying at the moment, not just the tech stocks. As I said, they've had a good run for the past few years. And as I said, whoever's got a balance sheet, interest rate can't rise. The level that the debt is at in the US, you can't raise interest rate past 2%. There's no way the Fed can raise interest rate past 2%, in my opinion, anyway, without
Right.
crashing the market.
Yeah. So don't speak. That'd be really interesting because if you're right on that, I think it'd be really interesting to see what the effect of commodity prices is. I just think that you would see
Yeah,
commodity prices explode even further.
I've got that. Yeah, that's my theory as well. So commodity prices have got no limit. It's their time to shine. I believe it's their time to shine for the next few years. And then I said, always stay invested though. We all know that cash is the worst investment at the moment. So don't have cash, but always stay invested. And then, as I said, commodities are the way forward. So whether it be your gold stocks or whether it be wheat, nickel, whatever you
Excellent.
might
No,
want to buy,
that sounds really good, Don't speak. Appreciate that. That's awesome. All right, let's move along
appreciate
here.
it.
Let's move along here. Let's do YS and then Paul, followed by Deer Point. YS, how you doing?
I'm doing well. I really have 2 points, and I'll try to be a little bit of a contrarian, if you don't mind, just playing devil's advocate here. So, if all of us here in the room believe that the stock market is fucked, what are the chances that the Fed doesn't also believe that? Now, given that they believe that, they have two options, right? Everyone seems to be concerned that they will not be hiking because they don't want to be blamed for that. But maybe they take option number two. Maybe they hike knowing fully well that the probability of the market being fucked majorly between now and election time, for whatever reason, is close to one anyway. So bite the bullet, clean your political conscience by saying you tried, blame Russia for the fall, and then you have some time to get ahead of it later on in the season and saying now we're trying to stimulate the economy. Right? Also, everyone's thinking that commodities are the trade right now, and that never ends well, right? Everyone's trying to pile on and predict the future, but also from a war and political perspective, this may be a crisis that's also an opportunity for the United States, right? We need oil, we need gas. Russia has it. Now Putin has revealed his hand that he's thinking bigger than just the eastern Ukraine. So why not take that into consideration? Use the political good faith that America now has as a backer of Ukraine in the world. Try to defeat Putin as quickly as you can with overwhelming force or assassination that you try to cover up or whatever. Go into Russia ostensibly to protect the Russians and clean up stuff. Temporarily talk about reparations, maybe try to privatize a lot of what the oligarchs now own in Russia, relieve the commodity stress while you do this, and be hailed as a hero. Now, I'm not saying this is likely or easy, but if I'm Biden, I'm thinking, unless I do something, a judo move, to then invade Russia or whatever and put everyone in their place, there's no good look for me. They'll blame me that I didn't anticipate it. They blame my response. The market's going to collapse and all that. So those are my two takes. First, the Fed knows that the market's going to go down. Everyone does at this point. So bite the bullet, right? Look at the chart for the last 2 years. It went up and to the right. Who's really going to blame them if they lose 20, 30%? Where does that put us? 2 years back? Who cares? The wealthy class might care, but people like me who have regular shitty jobs don't, right? If anything, that's part of the whole populism wave. Then increase wages, sure. Increase wages, drive inflation. No problem. Drive interest rates up. On the other side, subsidize poor people, right? Rob Paul to pay Peter or whatever. Subsidize housing so it doesn't crash. Subsidize energy so they don't crash. Declare an emergency situation, which it is. No one's going to blame you for that. And then think about stabilization again in the next 2 years or so.
Well, so why? So let me. That's really
Go ahead, George.
interesting. It's really interesting. I think. Listen, I don't like usually talk much about the Fed because everyone's got an opinion. Opinions are like noses. Everybody has one, right? I'm no good. I don't know anybody who can get this right. I think the Fed is so deeply politicized. They have no plan. They're lurching from one side of the road to the other. They're just trying to put out fires. I think you're right when you say, hey, better to blame all this stuff on Russia and blah, blah, blah. Yeah, sure. Okay, so let's say they do that. Then what do? Then my guess is if they do that, commodity prices go up even more, and the bond market sells off, and blah, blah, blah. And then that's, of course, who the hell knows what's coming between now and then in terms of what goes on with the Ukrainian situation. So, you said it, I said it, Connor said it, and Conrad said it. There's no good outcome here. There's no, and to the idea that, everyone knows the market's going to go down, well, try telling it to the trillions of dollars that have flowed into the equity market. I mean, you saw more money come into the stock market in 2021 than by individuals in the prior 19 years put together. So, there are people's opinions in their portfolio. People are fully invested. I mean, you look at the data out of Bank of America Merrill Lynch, percentage of household assets and equities and blah, blah, blah. I just don't think it's a good answer. You raised a good question, but there's no good answer. All right, let's move along. I want to go to who was next here? Was it Paul? I think it's Paul.
Yeah,
and then,
Paul.
Paul, and then Deer Point. Paul.
Hey, thanks, George. So I guess just taking off from what the last speaker was talking about, a lot of these commodities today are the markets cannot balance themselves. And we talk about oil, oil, oil. That's great, but it's not just oil. EU gas, copper, aluminum, coal. I mean, you name it, right? Across the board. There is only one end result: how the physical markets balance themselves, given that there's a real shortage of molecules, tons, whatever you want to call it, and that is an outright recession. Be it US, be it global, I have no idea, no freaking clue, but that is the only way. And I'd love to, hear someone else's opinion. If someone thinks that there's a different way to balance some of these markets
No,
physically.
Paul. I know. I've been asked. Let me answer. The fact that we have deficits in all these markets, oil, copper, you just go down the list. A lot of extractive industries. It's a result of years and years of underinvestment. And it's not something that's going to be solved with a push of a button. As the saying goes, the solution for high prices is high prices. You need to have prices at a high level for an extended period of time to try to encourage investment. And the problem is this lack of investment is further exacerbated by the ESG bullshit.
Correct.
And I'm hopeful that you start to see a couple things the last few days. Maybe there might be a rethink. I mean, it almost doesn't matter what any government says or does. The screwed up world that we're living, people, hang on to every word Elon Musk tweets. And maybe he was serious and maybe he wasn't, but he was tweeting about, we need to drill for more oil and gas right now. Now he's probably talking his book because, he wants, wants stock market to crash. He owns a lot of Tesla, blah, blah, blah. And by the way, just like this room is not going to be allowed to degenerate into a Fed watching room. It's also not going to be allowed to degenerate into a crypto room or a Tesla room. So I just want to tell everybody right up front. If people come with Tesla questions, I'm going to cut you off. All right?
No,
Just
so
say that. Okay, well, let me answer the question.
Okay.
The question you asked, the answer, it's not going to be solved. The only way it's going to be solved in the short run, get a recession.
Exactly.
All right? So the Fed can't print more oil. They can't grow more wheat. These are structural problems. I hope that answers your questions. Is that what you had in mind?
No, absolutely no. I'm totally with you. It was probably less of a question, more of a statement. That's the only way it balances itself. So if you're looking at the question of what are the market, or especially I'm getting more towards the bond market, what are the price at? Did the price at for the event that we're having inflation, blah blah blah, and 10-year needs to go to 3, 4, 5%, whatever it is, or do we price for the event where we're going to have a recession and a deep one at that, and price for a potential deflationary scenario?
Hey, stop. Paul, what if I told you we had a recession, but you know what? Yeah, inflation goes down, but we're still stuck with 4 or 5% inflation. Think about that. That's a possibility.
Sure.
So my point is equities have had the best of all possible worlds. And now we're going to something less good. We had maximum valuation, maximum bond prices, maximum liquidity, maximum investor sentiment, record low oil prices, blah, 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 blah. All right? That's all gone now. And what the world look like. Go ahead, Nick. Go ahead.
Yeah, one thing I would just kind of add is, everybody's so bullish on energy right now. I mean, like 8 months ago, no one talked about energy. If you got into a room and you brought up energy, crude, whatever, everybody just laughed at you, left you out the door. I mean, now that's the opposite. The pendulum swung so far this way that you can't get into spaces without it being energy related. So I'm an energy bull. I think energy long term is hydrocarbons have a space in your portfolio. But to George's point, I mean, when everybody's on one side of the boat, as an investor, you have to be cautious. So I would just submit to you guys that the price of oil may go to 200, may go to 300. We don't know. But if it doesn't and it hovers between 80 and 100, I think there's plenty of opportunities in energy. But if that happens, if you own energy names that are highly levered, the exploration companies, a lot of the Canadian companies, some in the US, if they're highly levered to the price of crude. So if the price of crude goes from where it is today at 115 to 85, a lot of those names can get cut in half, So I would just submit that you guys, people need to be very careful. There are plenty of other opportunities in this market that you can invest in and make money long term. Long term, I mean, in the next couple, 2-3 years, and not jump from one idea to the next. Everybody went from COVID stocks to energy. It seemed like overnight now, right? So no one talks about ARK anymore. By the way, George, have you seen a Tesla room lately? Have you? I haven't. So that's my point. My point is no one's talking about this stuff anymore. Everybody's now an energy bull. Everybody now is an energy expert. Everybody's a commodities expert. So, people need to just kind of be aware that, money kind of flows, to the path of least resistance. And there are a lot of people out there that are, a mile wide and an inch deep when it comes to crude oil, energy related names. So, I would just say, let's have a level head. There are plenty of opportunities out there,
Awesome, O'Hare. All right, let's move on. So we're going to do, we got my good friend, Mr. Deerpoint, and we're going to follow him with MG, and then we're going to do M. Deerpoint, my friend, how are you?
I'm doing well, George. How are you? Sorry, I'm outside. It's like 80 degrees here in South Carolina today, so it might be a little bit loud.
Deerpoint. That's a flagrant foul. You're peacocking. 80 degrees. Where are you?
I'm in South Carolina.
Cool. Where in South Carolina?
I'm on the coast.
Charleston, near there?
Yeah, Hilton Head right now,
awesome.
currently. Yeah.
All right. Well,
So I was just going to kind of touch on two things. Maybe I'll just throw it up in the nest, but this is just the cushion that companies have kind of built, basically. And what this is basically saying is um, companies don't really have a reason to create inflation right now to safeguard profits. This is all in aggregate, though. And so, like, as you've seen since the 80s, they've just kind of built a huge cushion, because I know somebody was talking about, companies kind of creating inflation to drive profits, but there's a massive cushion there. But what I really wanted to speak about was just kind of maybe the whole OPEC and spare capacity issue. And I wanted to make sure there were not too many of our Saudi friends in the room, because I didn't want to get Hajoukji'd for talking about the Crown Prince. But, Saudi Arabia has basically been cutting output. And I think that this has led to a lot of the kind of supply driven issues that you've had. I mean, like, I think for on average, since the like mid 20 teens, they've kind of been keeping that output under 2 million barrels a day. And I mean, this has again led to a lot of those supply issues. And I don't think until you really start to see spare capacity come back online, which it's still currently falling, will you really you're still going to have that kind of, like, let's say, demand crunch in the oil market. So I still think relatively, it's in a good position, but I think everybody kind of agrees on that. So those were just kind of my 2 points I wanted to bring up.
Yeah, no, totally. To your point, I don't know how much of the conversation you heard. I mean, it really is a question of time frames. I mean, you and I agree on the other case for oil. The question is right here, right now. And it's funny. I would like Gabriel Kaplan to come up and talk if he would, but I just retweeted a couple things from his Twitter feed, which I just loved. A couple weeks ago, he writes here. This is from like a week or two ago. Where the hell did it go? Oh yeah, this is from the February 21st. I've never seen so much talk about oil in my Twitter feed. So that's a tell. You have, as I said earlier, if you're in the room, um, in my Twitter feed, I got on a dust up this morning, but so many people would chime in, oh, oil, and you combine that with, as I said a few minutes ago, the sentiment indicator, Tommy Thornton technical thing, the daily sentiment indicator is up at 96. I mean, it wouldn't take much. I mean, if oil fell, whatever I'd really like, let's just get the correction over with if there's going to be one, and just de-risk the oil long, and then we can reassess. With sentiment where it is, and Kramer now bullish on energy, and all the expert armchair immunologists and expert oil economists, it just bothers me. So anyway, but otherwise, you and I are all good to your point. All right, let's move on. I think we're gonna do M, and then Dave, my friend Dave Collum, and then MG. M, what's up?
What's up? Absolutely love your spaces. I just had a quick comment on you mentioned the Elon Musk tweet. Don't you think that I know you said preventing a recession, and obviously and duly helps him, but don't you think his tweet, like probably all of his overhead is oil? You know what I mean? All of his production prices go up, all the shipping prices go up. I mean, everything.
And let's just do this. Just like as Elon Musk famously said, I don't respect the SEC. I don't like the SEC, whatever. I don't like Elon Musk. I don't trust Elon Musk. The guy belongs in jail. I don't want to waste time in this room talking about Elon Musk. I just gratuitously threw that comment in there. If there's something else you want to talk about, that'd be great. But is something else maybe more worthwhile than Elon Musk? Is something you want to talk about?
I would just say, regarding, can they raise rates? Can they do? And personally, I just bought the TLT last week, even though I'm predicting that we're going to raise rates 0.25. I personally still think they can. Are they afraid to crash the market? I mean, by all estimations, all the insiders, all the Fed insiders have sold, a couple months ago. To me, that signals that they don't care where the market goes, in my personal opinion.
Yeah, no, I agree with that. What they really care about is they care about credit spreads. They don't want the economy to seize up, and credit spreads really haven't meaningfully blown out yet. They're up a little bit. It's not a big deal. Keep in mind, for any of you keeping score at home and watching the AYG, there's an element of duration in that. So just the fact it's gone down a few points doesn't mean spreads have widened. The spreads are up a little bit, but not very much. But what's really interesting to watch now is you're seeing emerging credit problems in Europe for obvious reasons, because of the whole Russia situation. You've seen the prices of various European banks get thoroughly trashed. Friday, there was some movement in some of the FRA, OIS stuff, but that's all Chinese to me. But Bob Justice, who's a friend of this room, he's on here right now, who's a real great credit guy in his job. He and I made a pact a few months ago. He has to turn on the smoke alarm when credit starts to percolate. It's kind of starting a little bit, so we got to watch this space. And obviously, listen, if Russia, the Russian banks, who the hell knows what's going to happen? If they blow up, I mean, it's this is going to get very interesting. So we're just dealing with so much uncertainty right now. Is why I think being like quote unquote Fed watcher, like whatever you think right now, a week from now may change depending on what's happened and depending on what happens in Eastern Europe. All right, let's move on. So, Mr. Dave Collum, how are you, my friend? Good to see you. It's been a few days. Having fun up there in Ithaca?
Yeah, I am. I've been jumping in and out with a power cord problem, so I should probably just pass and try to get the rhythm of this room.
All right, whatever. We'll keep you on stage when you feel like speaking up. Just jump in. All right,
Okay.
let's move on. I think it's MG's turn. MG, good to see you. What's up?
Hey George, how you doing? There's a couple points that I just want to kind of bring up, which is, and I apologize for the hoarseness in my voice. I'm getting over a cold. But basically, if this is something that O'Hare brought up earlier, which is, how much oil increase can the economy handle? And just a kind of cursory back of the envelope calculation, which is really something I always did when I was kind of investing professionally, and certainly as a individual investor, I do this all the time. I'm looking at oil is increased roughly about $50 year over year. If it stays there, you're looking at $50 times 21 million barrels per day is U.S. consumption times 365 days. You're looking at a $400 billion hit to GDP. That's almost 2%. I mean, that is at some point that kind of level will cause some sort of recession. And then the second point is that, and that may be the case because there's nothing that anybody can do anything about it because, like you guys have said repeatedly, that this is a supply constrained issue with regards to energy prices, and they've made it significantly worse with kind of the escalation and the sort of the conflict with Russia Ukraine. So right now the other issue is that someone had mentioned what would happen if we had a recession, but also inflation. And my sense is that it depends on the kind of recession we had. And I suspect that the Fed, and just looking at kind of like most political, if you look at the last 200 years across different economies, but certainly across the US economy, the one thing that I think scares most politicians is some sort of deflationary recession. That's almost the root of a lot of different political kind of revolutions and fomenting and all kinds of craziness. And that's essentially what scared Roosevelt in the 30s. And so that's why, he basically, people suspect, and I kind of agree with the argument that that's why he went off the gold standard, or at least caused an inflationary bump to gold prices overnight. So my sense is that, like you said, everybody has an opinion on this, and opinions are as good as assholes. But I'll just throw my 2 cents in there. If the Fed had to choose between inflation and deflation, I think they choose inflation all day, and they just say, you know what, let it ride, and because right now with this much debt, that's going to be really difficult. And then the last thing I would say is that you know I think right now you're right in that the credit markets haven't sort of priced in a lot of craziness. But this last week, with the kind of sanctions and the kind of restrictions that are coming on board, I think a lot of those repercussions will be hitting the tape in the next 2 to 3 weeks, and a lot of those sound like they could cause severe credit problems in Europe, especially with the amount of leverage that exists in European banks that exists in a lot of that stuff. So that is a serious concern.
MG 100%. I referenced that in I think one of the comments I made. Friday, when we had Bobby Justice in on yesterday, Friday you started to see shit start to happen. And, you look at the capital exposure of the European banks to Russia. It's worth paying attention to. And you've seen some pretty horrific stock price declines, 30-40% in some of the European bank stocks. So that may be a harbinger of things to come. So I think you're very right to flag that. Very right to flag that. And just it's funny listening to you talk. I mean, you're a smart guy. I've been in a lot of rooms together and listening to you talk, and I'm like, I was thinking of the old Laurel and Hardy, cartoon guys, and I was like, oh, Ollie, that's a very fine mess you've gotten us into. It's like listening to you talk. Well, the Fed wouldn't. We'd rather have you know, inflation with the recovery. I'm like, all the things you were enumerating, the possibilities. I was like, that don't sound like good. Like none of those sound like good outcomes to me. Some are worse than others, but none of that's equity positive. If you ask me, I don't know. Would you agree with that?
I definitely do agree with that, but I do think that these guys can try to print more money. I do, they're not really technically printing more money, but I think that they can try to introduce more liquidity, because at the end of the day, everyone wants to avoid short-term pain, and that's the name of the game. So
totally, but there's no, again, the J Pal's a man without a plan. There's no good way out of this. And I've used the example numerous times. It's like a car careening down an icy covered road down a mountainside, and O'Hare's driving, and I'm in the passenger seat, and I'm like, O'Hare, quick, we're getting over too far, we're gonna hit the guardrail. Quick, turn back the other way. So he spins it, we go back the other way, we go flying across the other side. And they're like, no, O'Hare, you're gonna hit the other one. Turn the other way. Okay, it's like we're slaloming down the mountain. There's no fucking good answer. All they're gonna do is keep punting, trying to, as you say, avoid pain. But the markets are closing in on them, so there's no good answer here. There's just no good answer. And by the way, in any and all circumstances, I don't care what door you pick, how in God's name you own a Kathy Woodstock or anything of that ilk, is just beyond me. So I just think there's going to be, pain, House of Pain, whatever the hell. Oh, by the way, that's what we should do. I got to ask you a question. Do you think it'd be really annoying? I found the page on the internet where you can download. You know what? I'm not even going to say it. I'm just going to do it. I ask. Do you think it would be really obnoxious? I know I'm obnoxious. I have the CNBC Mad Money soundboard. If we start using those sound effects, would that be out of control here?
You're just wound up, George, which is great. If we could get a soundboard like that, that would be fantastic.
I have it. You know what? Here. Why don't you drive the bus for a couple minutes? I go find the soundboard. You go ahead. You ask the questions, and I think actually, you know what? I want to get. Hold on.
Well, Dave Collins in here.
George, can I just add one thing here?
Sure.
One of the things we've been talking about is not just the fact that these stocks are overpriced and that's bad and blah blah blah. There's also a philosophical view that there's been an incredible amount of misallocation of capital that's literally led our economy down totally the wrong path and led us to a point where we can't recover. And one of the examples, one of the philosophies that's been undergirding a lot of this sort of tech rise is, technology is going to solve all our problems. There's a deflationary, kind of cycle coming, and all of these other things, commodities. If you're building things, that's so yesteryear, and you got to look to the future. Well, one example of that was, what happened to Rivian last week, which is, these guys looked at their actual components that they had to sort of produce. They tried to increase prices, which was pretty substantial. And immediately within one day, they had to basically, they had their tail between their legs and they had to reverse course. So that tells you that there's limits even to sort of technology sort of solving some of these problems.
Right. Well, that's a good point, MG. I mean,
hold on. Here.
Yep.
MG just hit a hot button for me. MG,
yep.
I could kiss you. You just gave me an insight. So now I'm going to go from being an asshole to a bigger asshole. So MG, I'm playing with you. You mean to tell me that if we weren't keep pumping billions of dollars into pieces of shit like DoorDash and Snapchat, and we need another app to do this and that, that wasn't really adding to the economy? Maybe some of those hundreds of billions of dollars they're going into funding these bullshit unicorn companies. Maybe, just maybe, if some of that money went into a hole in the ground so we get some more hydrocarbons, that maybe we'd be in a little place. I mean, surely you're not saying that, are you?
Well, I think that's been a common refrain in these spaces for the last couple of months, is that and people don't understand that, why are you so upset against tech stocks? Why are you so upset against Kathy Wood? Look, there's a there's a deeper problem with misallocation of resources. Like, yeah, people don't make money, and like, yeah, if you didn't invest in it, you missed out. But at the same time, it actually is a huge opportunity cost for society, and I don't think people understand that.
Well, MG, I mean, I don't know how long you've been in investing, but this is exactly, you're right. And this is exactly what
I'm a
happens
30-year investor veteran, so
okay,
I've been
there
in
you
here
go.
for a
So,
while.
yeah. So, this is exactly what happens in the late stage cycle of a bull market. I mean, George talked about late 90s when you had pros like Stan Druckenmiller, like yeah, by the way, George, I don't know, you forgot Michael Steinhardt. I mean, he got his ass just completely reamed in the late 90s, early 2000s, and he actually had to close the shop down for a long time. Turned it into a family office. Michael Steinhardt,
Do you
famous
guys remember
investor.
all the articles about how
Yeah,
Buffett had totally lost it in
yeah.
1999?
Oh, yeah, yeah, exactly. So you're on the same page as me. So I agree with you 100%. I mean, what happens is you get this blow off like we just had. I mean, there was a lot of issues. Well, for one, you had COVID, you had several $1 trillion of new money into the market. You had the Robin Hoods of the world. You had Twitter that just blew up. So everybody was basically not going to work. They were at home on Twitter in these chat rooms talking about stocks, and everybody became a fucking expert on equities overnight. And everybody's an expert when prices are going up, right? When money's flowing in and prices are going up, everybody's an expert. I remember, I was in a room not long ago, actually, earlier this year, late last year, somebody had a Peloton room. There was, that was a big thing for a while, and Peloton was like $150 a share, and I just piped in saying, look, I think if you own Peloton, you should sell it. If you don't own it, you might want to short it. This thing's just it's a house of cards, and of course today Peloton's $23. So there are no more Peloton rooms. There are no more Tesla rooms. I don't see any. There are very few even crypto rooms or NFT rooms. I mean, you're going from one. This is like a ping pong game. You're going from one soup du jour to the next. And right now, it seems to be energy. I've been in energy. I've been in energy for 10 years. Ever since we started our strategy, we've had an allocation to energy, and it's been good times and it's been bad times. Right now, they're very good times. And so, to George's point earlier, at what point do you kind of take a few chips off the table? Like I said earlier, oil, if it trades between 80 to 110, that's a fantastic result for everybody. Except for if it drops from 115 to 80, a lot of the really smaller levered names are going to get hammered. And so you got to kind of pick your spots and just kind of be careful. But I agree with you that it seems to me this is exactly indicative of what's going on right now in a lot of these spaces, just in general on CNBC and even on sometimes on Bloomberg. It's screaming, kind of late stage bull market 1999. I agree with George. I think ARK, a lot of the stuff that they own, I think that whole ETF is going to come completely unravel at some point. Kind of like CMGI. I remember when people were, I didn't own it. I had a lot of friends that were in CMGI and they made a ton of money. The ones that actually got out, a lot of them lost a ton of money. And so, again, you if you live long enough, you see these cycles and you kind of learn how to navigate through them. So let's go to more questions here. Anybody else? Go ahead. Who do we got? Robert, and then Javier, and then Soki. Go ahead, Robert.
Thank you. Another fantastic space. So thank you, guys. I had a question about gold and wanted to get your guys' opinion on that as possibly a space to hide. I mean, obviously it broke out on all the war kind of stories, but I'm wondering if this is like a sustained breakout, and at the same time, of course, with the breakout, you get all these FinTwit guys jumping on it. So that's, I think, part of the purpose of this room, to kind of filter the signal from the noise. And so I wanted to hear what if you guys think there's a more sustainable breakout for gold here. I mean, we just heard from MG that the Fed obviously prefers inflation over deflation, so that would be positive for gold. Further, I think we're seeing a huge change in just the global environment. For me, it started kind of after the GFC. We've seen like populism and kind of the starting of like kind of the fourth turning that Neil Howie talks about. And now I feel like ever since COVID started, that really is starting to kick in. We're seeing inflation. We're seeing now huge geopolitical moves So all this instability is, I think, very positive for gold in the long run. And then, what do you guys think of gold miners? To me, they seem a little bit like the oil producers, maybe 2 years ago. They haven't done much. They have actually been down for quite a while, but they also have, similar to a lot of the oil companies, their production costs are way below the price. Some of them have record free cash flow right now. So do you guys think, and I think they actually haven't moved that much compared to how much gold has moved. So do you guys think that's like a segment of the market to kind of hide while a lot of it is
House of pleasure.
okay?
There we go. There we go, George. So
Easy answer.
Robert, listen, there you go. I like that, George. That's fantastic.
All right, O'Hare,
So,
I have a new
Rob,
toy. I have a new toy. It's bad enough I play lousy songs at the beginning.
so
Now I'm going to go nuts with this thing. All right, keep going.
So look, Robert, that's a fantastic question, and I agree with you 100%. Now, again, everything in moderation. So our strategy has been in gold and the mining stocks for quite a while. Back in 2016, I'll just give you an example. And let me back up. I think that today's setup, to your point, today's setup for gold, silver, just the whole precious metals complex, and mining stocks in particular, today's setup has never been better, in my opinion. Now, everybody's got opinions, but in my opinion, it's never been a better setup. A lot of these miners have gotten leaner, meaner, just like a lot of the energy names. They've been through the hard times. They've learned. They've gotten some religion. A lot of these names, the ones that we own anyway, the production costs are much lower. In a lot of cases, half of what the price of gold is. So there's a lot of margin for them, and the price of gold is only going to continue to go higher, in my opinion, over the next few years. The macro setup is fantastic. So having said that, I would just tell you that, if the people in this space, if you don't own an allocation to precious metals, that's something that's an area that you should take a look at and investigate, because many of those companies are not the companies of yesteryear. And let me just finish by saying, in 2016, as an example, many of these we were in energy, and when we were in precious metals going into 2016, many of the names we were buying were in the single digits, low single digits. These were, though, 500 million market cap to 2 billion market cap companies. By the end of 2016, many of those names had quintupled to 10x. And I'm not kidding. I mean, just go back and look at the charts. When you look at 2016 and what happened with precious metals and gold and mining stocks, and you go and you fast forward to today, night and day. The setup today is even better. So to answer your question, I think it's an absolutely fantastic space to be in, although I would not be putting all my money in that space. Right? Thank you, George. All right. So Javier, you're up, Javier.
What's up, fellas? What's up, George? How are you, buddy?
Good. I got my new toy here. What's up, man?
I love it. I'm going to be really brief just because I've talked a lot this week. To be clear for everyone on here, I am not an investor. I could care very little what any stock does or any particular segment, but I'm a global ags and oil trader. And I've listened for the last 2 weeks, everyone's fascination with a market that I've spent 26 years in, whether the price was $20 or $100. And I want to offer one perspective, which is what I've dealt with for the last month. And the one thing that seems to be a risk factor that most, not all, there's a few oil economists and bankers that understand this, but very few do. And we're actually watching it take place today. You're watching the largest ever example of cancel culture take place. You're watching sovereign reserves be considered non-currencies. You are watching the picking and choosing of whether or not Russian barrels of products. And most people look at crude oil as a generic. It's a beautiful forward-facing commodity, but really defines products. It's a proxy for lots of different products. And our risk, my company's risk, and everyone's risk that's going on right now, and I can highlight this with the trade that the most opaque trade that everyone witnessed, which was Trafi picking up a cargo last week, realizing that as a private company who has previously been in trouble for having either sanctioned or embargo products, decided to remove their risk and sell this cargo onto the on the water once they owned it. And the purchaser of that ended up being Shell, right? So you've had this, you're watching live a transformation of canceling one of the larger producers oil, also their financial services. And in our market, in the crude oil market, the risk is that this is going to push an east-west rebalancing of global resource trade. And this is taking place in ags, this is taking place in minerals, this is taking place in the light-in barrels, this is, all of the AINs, which are going to be towards your plastics and energy inputs. And so we're trying to sort out what the real risk is here. And we have 100 different scenarios. I have a scenario if Putin walks home tomorrow. I have a scenario if this thing lights up. I have a scenario for the EU, NATO. Very few of these scenarios that take place right now, as long as we are continuing along the road that we're going, and anything that goes towards touching their oil as a proxy for a sanction or trying to force him into acquiescence pushes him east. Unipec and Sinopec are still lifting cargoes. India bought 8 million barrels last weekend, and you're whereas the global commodity market was a very open playing field, minus Iran and some Venezuela barrels. You were able to go to Russia. It's fungible assets, right? It's a fungible product based upon price at the time. If we push this into an east-west bifurcated market where you're canceling barrels availability or you're canceling where their destinations can go, it dramatically changes what the oil market looks like. So when people are discussing the risks, most people that I've heard talk about it, they're only concerned about what the price is. They're backseat driving, trying to figure out whether crude oil at 115 or 185 is reasonable. I heard somebody say yesterday getting it to 185 is almost impossible. That's just not true. These are the same people that were saying oil couldn't go below $25.
Yeah. Javi, you're my new best friend. So let me ask you. So I follow oil pretty carefully, but I don't know as much as you do. And I'm a huge fan of Mike Rothman, who's an excellent oil analyst. And he just on his conference call this past week, he touched on the very point that you're making right now. I'd like you to drill down a little bit more so you can explain it to the audience, namely that the oil, not all oil is the same. In that if Russian oil that previously was going to go, to the West, go to Europe, go to the US, wherever it was going, if all of a sudden that goes eastward, that sets in motion a whole bunch of things which the average idiot like me doesn't fully appreciate. I think you're starting to get to it. And he was explaining how the last time this happened, when you start redirecting barrels, even if the total number of barrels is the same, it causes all types of screw ups. And he's expecting much higher oil prices. He's not one of these guys. I mean, he just looks at inventories, and inventories inversely correlate with price. And we're still going to draw. This was a forecast even before any of this Ukrainian stuff started. But could you just please speak to what happens to the global oil flows? Like why is it you just can't send a Russian barrel that was previously going to the West, let's say, if it goes somewhere else, like explain how that screws everything up, and explain why it means much higher prices, if you could, please. I think we would all benefit from your wisdom.
I don't know how wise I am, but I like to try to take complicated commodity issues and dumb them down. So every refinery on the planet is tuned in a manner which allows it to maximize whatever technology they're using. So some are run like a heavy crude oil very well for heavy products. Some of them run lighter crude. Some of them can't run them. Some of them are set up not to run different grades. I don't want to get into all the grades in all the countries, right? Because it's so intricate, and it's sulfur content, it's viscosity. There's all sorts of moving parts with crude. And currently today, even in a demand-driven market, right, the globe's pretty good at figuring this out. There's a reason that Trafigura and Glencore and Gunvor and Mercuria exist, right? Because they're very good, very, very good at understanding where the imbalances are. When you remove them from being able to partake in this particular timing, which would be allowing a state-backed firm like Shell to move Russian crude, and removing the guys who are the literal experts at it, you create an imbalance, and you remove liquidity from the market. If you have to start transferring and moving east and west barrels that don't quite comply, you're going to have lower run rates for products. We are already seeing this in diesel. Diesel stocks are very low. You remove this from the equation. Somebody asked me yesterday, they said, well, what happens to something like diesel? Okay, well, I posted yesterday. I'm in Kentucky. I paid $4.79 for diesel. Somebody said, what are you going to pay if this thing blows up? $10 a gallon. Can you walk me through the math? Absolutely, I can walk you through the math. But more importantly to me as an individual, which is where people really start to understand these things, you care about how diesel is made and where it comes from when it affects your pocketbook, when it affects your family. Most people don't care when gasoline is between $1.80 and $4, or California at $5. You guys are still happy as clams. If we rebalance whether or not a large percentage of the supply balance sheet, where it can go and where it cannot go, to rejigger the system to absorb this is years out. Years. It will take multiple years. Earlier, somebody was talking about the Saudis decreasing production. During COVID, the Saudis did hard shutdowns, cold shutdowns on a lot of wells. Those wells aren't coming back. Some of them won't come back. They're going to have to either drill new or completely rehab. They're 24 to 36 months out. If they started today, they're 24 to 36 months to get above 10, for OPEC to be above 10.1 million barrels a day. This isn't some game that they're necessarily playing. This is what long-term rapid effects in a resource market looks like. Now, I'm going to take it even further, right? Because oil is the most sexy, visible product out there because it has the most liquidity, the most daily futures trading volume. But the biggest concern that we have, while oil is on the forefront, is ags, right? I cannot describe to you what the balance sheet looks like going forward by rejiggering Ukraine and Russia's grain exports. It's unfathomable. Like there's a few people out here that are deep in the market, but they're not talking. And the reason they're not talking is they're obligated. Most of like Cargill, Bunge, ADM, and Dreyfus, and Olam, and these guys, they are so net short long-term contracts to pay, for food inputs on in every continent on the planet. They're obligated. Some of these are 10-year and 20-year deals that they have in place with the Kellogg's of the world, right? They're obligated to supply them wheat and corn. There ain't enough. And somebody asked, I don't like to say, hey, I think wheat could go to this. I'm a chartist when it matters, but I'm not a chartist in events like this. Once you're above the cloud and Ichimoku clouds by this much, there's nothing to look at, right? You're in open water. It is free flowing capital and it's the path of least resistance. But I'll give you a scenario. Oil at $150 is going to have a less net effect on the global economy than wheat on the Chicago Board of Trade trading at $40 a bushel. That price right there is going to have a far more significant impact on geopolitics, social unrest, and demand.
Yeah, Javi, let me ask you something. And I'm not asking for a single point price prediction. I'm more instead trying to calibrate your bullishness. So, again, I'm not going to, this is not a gotcha game. It's just one thing if I don't know you, but so like you sound like you probably know what an over under is, or let's just say one touch option. Okay. If I said to you, one touch option on crude, this year, 150, would you buy it?
Under today's exact circumstances, with nothing changing other than this dragging itself out and no other actions taken on commodities, I would buy it right now.
Would you? What about?
Let me give you a heads up. Let me give you a heads up.
Go on.
I trade. So I work for a very, very large global commodity firm. It's actually a large financial services firm. I have to remain anonymous.
Of course.
My corporate positions are all about risk management. Privately, as an individual, I give no trading advice. I'm not an investor.
Oh, no, it's all.
I just want to tell you. Let me tell you how bullish I am. Since December the 23rd, at 7 o'clock at night, when oil went down 6% in the overnights and touched $66, I only have two positions on. I have been as max long as I can in my personal trading accounts, crude structures, and I have been max short, leveraged with options and flat price, the NASDAQ. The only two positions I have on. I have nothing else. That's it. go on with your over and unders, and I'll just keep
Yeah, no,
telling
all
you
right.
buy it.
So like again, just trying to calibrate your bullishness. I mean, you think oil can see 200 this year?
If NATO and the EU get involved in this, oil goes through 200.
All right. Now let's go to grain. Let's take wheat. It's the most well-known, visible commodity. So where are we? $12 or something like that. I mean, where do you think wheat could go to this year?
Well, considering it's been limited up for the last 4 days and they expanded limits for tomorrow to $1.30, it's all. I think that the near-term price inflections are going to depend on how we open tonight and go through the overnights. If it's limit up again, I think you might start seeing some serious margin raises. I think if you remove Russia and you remove Ukraine and just hang on one second, I need to scroll down here real quick, see who's on here. I'm going to reserve my comment. I'm going to reserve a comment. I had a comment about the grain cargo.
While you're looking,
I think $40 to $50 wheat. If you remove it from the balance sheet and the U.S. has a wet or cold planting, if we have any disruption in grain production going into the spring, and on March 31st, when the USDA puts out planting intentions for summer products, I think it's going to give the globe a very interesting outlook at what fertilizer does to farmers. I think we're going to be lower on acres than people think, and I think that the shift into beans and corn is going to radically change people's minds. I think beans are going to be equal to corn. All of those are going to be price drivers to acres available, right? So possibly that ends a little bit of a bearishness to wheat. I don't think so because they don't really cross over, but I think if this thing escalates again, if the EU and NATO get involved, if Russia becomes 100% persona non grata on the global platform, it's going to be unavoidable to avoid agriculture and energy, no matter what anyone says, because he will shut it off. He will 100% shut off. He will shut off all export. He will shut off all exports, and he will use this as his final crutch. He'll shut off gas. And he's already shut off all fertilizer exports, but he will shut off all grains. That's the nuclear bomb that he has that nobody wants to talk about because they just don't think he'll do it. He will have a few strategic trading partners. He will keep China. He is working out deals with India and everyone. India's gonna go east. Is our belief, because it becomes a path of least resistance for them. Shared borders, common interest, Belt and Road. India is not going to just say, get along with the West. At that point, you're looking at $15 corn, $40 wheat. You're looking at $25 soybeans if we do not have a perfect growing season in the United States this summer.
Wow. All right, everyone can take a break. I'll take a cold shower. Javier, if you can hang around, I'd love to hear more from you. I happen to, unfortunately, agree with almost everything you said, but whatever. Cool. All right. So, here I kind of lost track here. Who hasn't spoken yet? Who's up next? I see Silky.
Silky was next. Yep.
Yeah, Silky has his hand up. What's up, Silky?
Well, my question to you is kind of a perfect segue into what Javi was talking about. How, inflation's already at 8%, and commodities are clearly going parabolic. And although I was only born a month ahead of time, I keep thinking about October 1979. And I know we didn't have the debt back then that we do now, but for those of you that remember when Paul Volcker raised 20%, would you foresee something like that happening to slow the inflation?
Unfortunately, no. These guys don't have the political will to do it. I've tweeted out repeatedly. Probably should tweet it again. Stephen Roach, who's a friend of this room, who I know, he was formerly Vice Chairman of Morgan Stanley Asia, who worked for the Arthur Burns Fed back in the 60s, the beginning of his career. He's written how they just don't have any political fortitude to do what needs to be done. Rates, this is pre the Russian thing, of course, but they're very politicized. The only reason that the Fed got the bit in between their teeth and their mouth a couple months ago and did an about face on possibly raising rates is because it became a political issue. We're in this K-shaped recovery where 40% of the population lives paycheck to paycheck, and those are the people getting killed by inflation. And Biden's polls are or disastrous. And so that's why I did it about face. But no, unfortunately, I mentioned Stephen Roach. Is also Henry Kaufman, who's still around, Dr. Doom. He's 95. He wrote a piece a month ago. So I actually urge all of you in the room, because I kind of lazy, and this Twitter thing was a couple months ago. It's a very good question you asked, Silky. I urge you to go Google Stephen Roach, Roach. He's at Yale now. He wrote an article in the middle of January about this. And then Google Henry Kaufman. And the gist, my takeaway from that is, based on what they had to say, the Fed is so far behind the curve they can't see the curve. So no, I don't think they have the intestinal fortitude. They want the economy to run hot. They'll give them a choice between recession and more inflation. They'll take the more inflation, but then the binding constraint became that inflation got so far out of control. Go back to the analogy that I was giving 20 minutes ago, where they're Jay Powell's a man without a plan. And there is no plan. They're just careening from one side of the road to the other. This is going to end badly. So I thank you for the question. Robert T., I think you've been up for a while. Robert, what's up? Robert, are you there? I don't know if he's there.
Hey,
So
I
hi,
already
Robert.
spoke.
Hi, Robert, what's up?
I already spoke about the gold miners.
Okay,
You can
all
put
right,
me
great.
down.
Okay, perfect. Okay, let's move on. Prodigal, good to see you, my friend. How you doing? What's up?
Hey, George, I'm just going to listen for a while. I heard Javier speak, and I tend to agree with everything he says, so I'm just going to listen for a while before.
Yeah, let me just ask you one question, because I know you're less financial guy and more sort of geopolitical stuff. And do you have any updated personal views about the whole Ukrainian tragedy and what Putin's up to? Do you have, again, I don't want to go too far in that rabbit hole, but you seem to be a very informed investor in that regard. I was just curious what your latest take is on things.
Yeah, I mean, I think he's crossed the Rubicon. I think there's nowhere to go. I think the civilian casualties are going to get worse. I think it's going to be disruptions in the wheat market and other commodities. I mean, there's people keep on thinking as if they're going to decapitate Putin, right? He's from the intelligence services. He's watching these oligarchs already. If you follow him the last 10 years, he's basically assassinated and pushed aside oligarchs. So I mean, my belief is, if there is going to be some type of move to take him out, it would have to come from the military. But I'm not seeing that right now, even with the surprises. I think that this ends up one of two ways: either he takes over the country, or the losses mount too much and he sues for peace with the territory he gains and goes from there. But either way, it's not going to change the disruptions, right? A lot of us felt this way about commodities before Ukraine popped off. And they're really, I mean, if you see right now, PwC just ended all operations in Russia. I mean, there's whispers that they're now in the next week going to basically close off their internet like China does. I mean, it seems that these shifts are going to be permanent. Even if this ends with a ceasefire, sanctions are going to remain. I don't know, what's driving these, what's going to drive down the cost of inflation, food or energy. There's nothing, right? Biden still isn't leasing any lands for oil and gas exploration. Germany's still closing down its nuclear plant. Other than France, I haven't seen one country realign their energy policy. Not one. Macron at least had some sense to say, at least publicly, we're going to build 14 more plants. But nobody else is doing that. I mean, it seems that the Iran deal is stalled. So now he's running to Venezuela. I mean, you listen to some of these spaces, you look at some of these people, and they make it seem like, regardless of military successes, they have no idea the geopolitical ramifications of what's occurring and how we look on the world stage.
Probably I couldn't agree with you more, which is why people running out recommending fill your boots with Russian stocks a couple of weeks ago is complete jackasses. I mean, it's just insane. So hang around, Prodigal. I want to hear from you some more. Let's move on. Let's see. We got Chris and then DN. Chris, what's up?
Hi. Today's topic is very interesting and is very useful, especially for coming week. So I think today the gold, energy, ARKK was covered, and I think after the European war began, there's one sector that's impacted a lot. There's the finance. So far, JP Morgan Chase is down 20%. MasterCard is down 17% after the war began on February 24th. So at the beginning of the year, I think most analysts believe the finance sector is great this year, especially because the interest rate will be up. That will be good for retail banks such as JP Morgan Chase and Bank of America. But right now, because of the uncertainty of the war, what do you think the finance market is, such as XLF? I think
Yeah,
today we
yeah,
talked
yeah, yeah.
about the XLE. What about the XLF?
No, Chris, you ask a really, really good question.
Yeah,
Really
I
good
think we
question.
should cover this
Yeah,
sector now.
so we had a room yesterday, and and we had if you want to listen to the replay, Bob Justice, who's a good personal friend, is a credit guy. He was weighing in on this in particular. Usually when you get systemic problems, it's the financial sector starts to take it in the chin because that's the sort of circulatory system for the whole, financial system. And the fact that banks are breaking down so badly, and as you
Right.
rightly point out, it's like J.P. Morgan. We're not talking about O'Hare Savings and Loan. This is like the real deal. So you're seeing a lot of large cap financials, mainstream stocks breaking down, and this is a very ominous signal. So this has gone beyond a few months ago when we started yelling about Kathy Wood stocks and high PEs and all the garbage and yada yada yada. Listen, the average stock is down, I don't know, 30% or whatever the number is in the last year. We are in a bear market. We are in a bear market. You don't have to wait for some knucklehead on CNBC to tell you, oh, we're not in bear market territory because the soundbite index isn't down, whatever, okay? Now they're getting to the main event. They're getting to the large caps. They're getting to the financials. This is getting serious. I think you ask a very good question. And the transmission mechanism for this is pretty obvious. You have European banks,
Right.
Get absolutely destroyed. If who knows what's going to happen with the SWIFT system, all this kind of stuff. Obviously, the Fed's going to do what they do best, which is give money away to everybody to stop the thing from imploding. But the whole Russia thing, this is a huge transmission mechanism problem. So, I think you ask a really good question. Really good question. And actually, you know what? I hope he's not listening in, but he probably is because the Russians aren't stupid. They listen to everything. If I were Putin, and you really, and maybe I can push Dave Collins' buttons to get him to talk. If I were Putin, I would, the way you really hurt the West, and I tweeted this out, and I think I should retweet it. There's a great article the other day by this Irish economist, David McWilliams, talking about how the real vulnerability of the West, and Putin knows it, it's the financial system. So if you can engender a stock market crash, you engender a recession because you keep pushing oil prices up. Let's say this conflict goes on for a while, which I think it will. I hope it doesn't, but let's say it does. When oil prices, as much as O'Hare and I think it's all overbought and should go down, it doesn't. And oil prices keep going up. The economy, if you look at what's happening in the retail stocks, the housing stocks, now the financial stocks, as Stan Druckenmiller, I think, once said, the best economic forecaster out there for the economy are the internals of the stock market. You watch the groups that are working and the ones that are not working. O'Hare knows I'm right. And they're telling you there's a problem. And now you got the financials breaking down, and this is serious. So I think you put your finger on it. And, we started to see the end of last week, credit spreads started to move out for the first time in a meaningful way. No, nothing terrible yet, but just watch. And I think this could get really, really bad. So I think, you put your finger on it. That was an excellent question. Glad you brought that up. This could be a real problem. So again, the stock market itself, again, offers return-free risk. It's easy to see what could go wrong and cause the market to really go down a lot. Hard to see how it's going to go up much from here, if at all. I frankly don't think it will. But having said that, another friend of this room, John Roque, the best chartist in the street, go look at my Twitter feed, where he is known as the Chart Life, DA, and then Chart Life. He points out that even in the horrendous tech bear market of 2000 to 2022, when the market tech went down 80% during that period of time, the S&P went down 45, even energy went down 33. of the 649 trading days, the market actually went up 306 days, or 46% of the time. And there were 10 rallies, 10 counter trend rallies of more than 15%, 15 counter trend rallies of more than 10%. So nothing goes in a straight line. But what I would say, in a bear market, it's really hard. We can talk about that more later if you want to. What I would say is, there's in my humble view, the risk reward ratio on this thing, it's like all risk and no return. So, but Chris, you really, thank you very much for asking that question. I thought it was brilliant. The financial sector is now become ground zero for a lot of the problems that are occurring. So, thank you for that.
Thank you.
Let's move on. Let's go to DN and then Shaban. DN, what's up?
Hey, how's it going? Just want to say, first and foremost, I completely agree with what Javier said. You guys have actually been influencing a lot of my trading recently. I've been able to make a decent profit on some of the potash companies and fertilizer companies because of that complete fall off and the export bans from Russia, Ukraine, Belarus, and China. And I agree completely with what you're saying about the food supply, especially in terms of wheat. Besides futures contracts, what other companies do you think would see direct benefit from these prices going up?
Oh, here, why don't you take a shot at that?
Yep. Yeah. So related, publicly traded companies that you can invest in as a, individual retail investor would be Mosaic is one that's had a big move, but so I wouldn't be jumping into any of these names right away. I mean, if you're gonna buy them, buy a third of a position. So let's say you wanted to put a few $1,000 into it, just take it and divide that into thirds, for example. So I wouldn't just blow it all into one at one time. But Mosaic, Nutrien, which used to be Agrium and Potash, they merged. So MOS for Mosaic, NTR for Nutrien. There's another one that's smaller, Compass Minerals. They do road salts and other things, also fertilizers. CMP, that's one. So, there's plenty of, opportunities out there. I mean, this is great that we're talking about this because there you go. Thanks, George. So, that's an area that's, I think, going to continue to move higher over the next few years, especially with what Javier was saying, which is we've done a lot of that same work. And, a lot of those exports aren't going to be coming out of there, and you're going to need fertilizer. I mean, the reality is the population of the world is growing, and it's harder and harder to grow crops in the same place over and over and over. I mean, we see this in California, in the Central Valley, California. A lot of farmers are having to use a lot of these chemical subsidies into their soils because the soils just get depleted over time. So, I just think that there's a lot of opportunity there. But like I said, if you're going to invest in some of these names, I wouldn't just jump right in. I would scale in over time because they can come down. I mean, like everything else. I mean, they make these big exogenous moves and they can come down. So it's a good place to look. I would just scale in over time. So who else do we got? Yeah, actually, let's get Dave Collum in here. I'm curious to what his thoughts are on what's going on right now. Dave, you want to step up here?
Yeah, I can. I'm in a car, so it could get kind of screwy. I was stunned by the wheat prices that were projected. I kept thinking, what are the units on those prices? I'd like to draw attention to a Stephen Roach article that didn't get mentioned, the one back about a year ago where he compared Arthur Burns to Powell, in which he talked about how Arthur Burns thought everything was transitory till it was too late, too. So I thought that was a great article. I don't have much else to say besides the fact that I think I'm still a secular, massive, multi-year bear. So, I don't know how I re-enter this market unless there's a deep sell-off, which for me is a 50%er. Besides energy, besides gold miners. I own some Rio Tinto materials, the usual inflation hedging things that are pretty deep value, actually. They're not, they could go lower, of course.
Kind of like as Dennis Gartman used to say years ago, own things that hurt when they hit your foot.
Yeah, the other one is, I think I said last time I was on, I said, that Michael Ferry said own things that if they drop like a stone, that you just hang on to them. And that does not include Captain Dark Fund. That does not include Netflix. That does not include most of the stocks that are everyone's popular stocks. That includes stocks with good balance sheets to pay dividends, and you say, what worst case scenario? It's a bond, and those are the kind of things I'm looking for, deep value. I must confess, I saw a tweet by you, George, that you jumped on Cuppy. I must confess that I bought a couple small slugs of RSX, and that could be money down the drain, but it represents something like 0.03% of my total assets.
Yeah, Dave. Let me be clear about that. I don't have a problem with the trade per se. What I have a problem with is when you're not out there pumping and sending out stuff to hundreds of thousands of people on Twitter, millions of people. That's the problem.
Well,
So
you can be a guy who sucks a lot of people in. Unfortunately, just because of pure follower count, I'm starting to become one of those guys. If they knew how little I understood, they'd unfollow me and block me. So that's a separate issue. I'm in a rainstorm right now. I don't know. It's all fascinating. I like everything everyone's saying. So I'll let you experts keep talking.
All right, Dave. Anytime, you're always welcome here. The connection's kind of crappy, but we always love to hear from you. So please become a friend of this room. We love hearing from you, man.
I try to catch it when I see it.
All right, that's awesome. Thanks, Dave. All right, let's move on. Shabam, what's up, man? Shabam, and we're gonna do Shabam, and then Deanne's gonna weigh in. Shabam, what's up?
Hey George, great to see you again. Hopefully the audio is good here. I'm in a low connection spot, but I just want to make a couple comments on the oil market, and there's a talk on demand destruction. So the first data point to look at is the refinery margins and what's going on there. We are at almost decade highs there, so that tells me that demand is still going strong. Like the refiners can buy oil at these prices and still make a bunch of money on their refining margin, which tells you that the products are selling for really good pricing. And the second point I want to make is that Saudi Arabia just released their OSPs, which kind of sets the pricing for about 20 million barrels a day of export out of the Middle East, and they're the highest they've been this since 2000, and probably all-time highs, because I don't have a graph that goes further back. So that to me tells me Saudi Arabia feels that they can sell their 7, 8, 10 million barrels a day for $5 over the dated Brent price, and that's what they're selling it for. So they figure that this supply-demand issue that's going to happen with Russia off the market is way bigger, and it's going to just get bigger and bigger. So, I mean, from that standpoint, oil could be overbought and just continue going up, because there literally is no oil to purchase, and the demand is still going through the roof. So just want to throw that out there. Thank you.
Yeah, no, Shabam, you're completely right. I mean, whenever you have a situation where demand meets an inelastic supply curve, think Bitcoin. You know, Bitcoin went from 11,000 to 66,000 in less than a year. So anyone who would have said it's going to 66,000 within a year, would have been, the men in the white coats would have come and taken them away, with apologies to my Maxi friends. So when people throw out these numbers, $150, $200, $250, it's entirely believable. Just like Javi was talking before about where we could go. Listen, when you're hungry, how much you willing to pay? You're freezing your ass off in Europe, how much you willing to pay? So no, it's entirely possible. Entirely possible. So thank you for that, Shabam. All right, let's move on.
I think we got DN next. DN,
what's up?
Hey, just wanted to do a follow-up. Completely agree with the points made previously. The U.S. kind of, pardon my French here, but completely screwed itself with all these financial sanctions. Same with the companies, because now it's just incentivized the East, like the BRI countries, but also the OPEC countries and like the oil-producing ones. Call it Saudi Arabia, Indonesia, everything around there. They're all going to start going into the Chinese ecosystem. So I know a lot of, I guess, domestic production could be screwed up, North America-wise. But do you think the Europeans are going to bend the knee to the Russians, or they're going to start trying to import oil and natural gas from North America?
I think maybe we should drag Javier back into this, or Shabam. Shabam, you want to speak to that? Because I know, not all barrels are created equal, and it's not so simple. So Javier was explaining earlier how different refineries around the world are tweaked to different grades of crude, and you just can't say, okay, well, with a crayon say, let's redirect this here and that there. It's not so simple. And you look at the U.S. Look at the difference in grades between what we heavy oil export, import, whatever. It's not so simple. So I don't know, Shabam, you're I kind of think of you. You're the sort of resident oil nerd in the room. I say that affectionately. Do you want to have a stab at that question, Shabam?
Yeah, sure, you betcha. I don't know if I understood it properly, but the U.S. is in big trouble because they need heavy oil for a lot of their refineries. Mexican production is declining, and their internal consumption keeps going up. So basically, they have nothing left to give. And then Venezuela is the other one that's really gone downhill over the years. And Canada can only pump so much. There's only so many pipelines going down south. So they've basically screwed themselves over into this corner here. And then Russian oil was coming into the U.S. just a bit, and the refined products as well. But really, the U.S. has really no option right now. They have to go to Venezuela or maybe Iran. I'm not sure what kind of grade exactly Iran sells. Iraqi heavy oil is the other option. So there's not much left there. So yeah, the shale oil is not going to cut it. You could increase shale production by 3 million barrels a day. Well, you got to export that all out and then import 3 million of heavy oil in. So really, your shale is not going to do anything. It's not the Band-Aid that it's not even a Band-Aid solution at this point. So I think people really need to take these things into account before spouting off nonsense on TV and on Twitter about shale this, shale that. Just my opinion, anyways.
Shabam,
Can I jump on the question?
Yeah, go ahead, Javier. Go for it.
I think the question was more about whether or not Europe could bend the knee, or if they would take a hard line on the energy and turn and rely more on gas and products from the U.S. It's not physically impossible.
Hey, Javier, I don't know what's happening to your reception when you're a little squishy on us, but if you could try.
How's that? I just moved. Is that better?
You're much better now. Go ahead.
Okay, so if the Germans and in Europe as a whole decided to say no to Russia for everything, or if Russia turned everything off, it is not physically possible to move enough LNG into Europe to cover the backfill for two reasons. One, there isn't enough moving to do that, so there's not enough supply to make up for the MMBTUs that are moving from Russia. Two, the LNG carriers. When you finance one of these, they're on very long-term contracts, right? I mean, the daily like most things you think about daily utilization rates, these LNG cargoes, they're like minute utilization rates. Like that, we know down to the minute. These things are not made to stop. They are made to run fully. And you have a what do you call it? You have a transfer problem. There's not enough terminals in Europe to accept cargoes. If there were enough cargoes to go, Europe's screwed. There's no way around this. But this is the most leverage that I would say this gives Putin similar leverage over Europe as OPEC previously had over the world. It's an incredible amount of leverage. Europe, if they want to turn their lights off, if they want to not heat their homes, Germany can go ahead and press this as hard as they want. But it's not physically possible to backfill. I think that was the question. It's not possible.
Yeah, Javi, you hit the nail on the head. And the other thing too, and I don't know if Prodigal wants to weigh in on this, but in a lot of these rooms in recent weeks, I've been surprised, I apologize for my ignorance, to really learn how different the European view is on these things. In other words, the Europeans aren't as much in our camp as maybe we thought they were, given their view that we're the bad guys for, Iraq and weapons of mass destruction, this, that, and everything else. And then you look at the historical ties between Germany and Russia going way back. You then look at, what's his name, the chancellor, the one before Merkel, as soon as he's, I asked like, how in God's name could the Germans wake up and find themselves in this place where they're getting 50% of their natural gas from Russia? But it happened. And so their view of Russia isn't exactly consistent with our view of Russia. And so to the question of bending the knee, like all things being equal, which they never are, that just makes me think that, yeah, they might. I don't know, Javi, you got any pushback on that?
So 15 years ago, Russia was in a very different place. Their economy had just collapsed. They were taking, they were taking on global financial help, and they had one commodity that Europe needed. And there's a video, and I've tried to find it. I can't find it. If anybody can find it, I'd like them to repost it. Putin was at an energy conference in Europe with all of the heads of
bunch of different energy companies and energy ministers, and he's sitting on stage, and he jokingly looks out at the audience, and it's an auditorium, and he said, "You guys are great. You guys are basically doing business with the big bad wolf, and you're going to trust the communists with sending you gas. What happens when I decide to turn it off?" He says this publicly, and everyone in the audience laughs, because at that moment, Europe was his bailout. Europe was his leverage point. Europe felt like they had a position on him in which he couldn't screw them, because he needed these infrastructure deals. And then the hubris of the West, and this has been in dealings with every single resource producing country we've done deals with, has been this notion that if they're brought into the global fold, if their economies are uplifted with our dollars, that their perspective of the world, their worldview, would be more in line with ours. We are finding out. Well, here's an interesting crux for you. And as Shabab just pointed out, we're very much in a similar circumstance now with globally as Europe is with Russia. We're in that same type of circumstance with China, as far as products and imports go, right? We've outsourced enough of our business under the same guise that if we uplift China, China becomes a global trading partner that looks at globalization in the lens that they're a partner. This should be a wake-up call for people far beyond oil, far beyond ags. It should look at how we've
Right.
aligned all of our resources.
No, Javier, you're totally right. Dave Collum, are you still listening? Dave Collum? Because I want to push Dave's buttons because he's got a good perspective on this. So I'm going to really stir up a hornet's nest now. People can say, "Why should you stop now, George?" That's why we come here. We came for the stock ideas. We stayed for the controversy.
Why don't we give George? Why don't we get J5 and Roxy in here, and then see if we can get Dave back in here in a second.
All right, no.
Dave,
I want to say that. I want to go down this rabbit hole. So, Dave, did you hear Javier talking about how Europe is this misguided view that if other countries they have our values, and why can't we all be friends and get along? When he was talking, I don't know if you heard his rant, but it reminded me of Obama. And now here comes the hornet's nest. His whole misguided view from the Harvard Law School faculty lounge that the Mideastern countries are just like us, and really if we just had jobs and health care for all of them, they would cooperate with us. And I mean, it could have been a more wrong, misguided approach. So
That's what I call the Wizard of Oz model. The Wizard of Oz model is you kill the Wicked Witch.
Dave, we lost you.
Everyone drops their weapons, and I'm getting fucked here by I'm in the checkout line.
Follow the instructions on the card.
I'll tell you what, Dave,
skip me for.
You want to come back in 5 minutes?
For 2 minutes. Skip me for 2 minutes.
Yeah, all right. You come back in 2 minutes. I want to finish with it. All right. So here, who was next? Who was next? We're waiting for Dave.
Yeah, well, let's get J5 in here and Roxy next, and then we'll do Max afterwards.
All right, J5, what's up?
Hey guys, I've got a natural gas question. So, I've had an allocation of the natural gas space for a long time, and for most of that time, most of the last 10 years, it seemed to have moved. It seemed to be positively correlated with the price of oil, because I'm talking about particularly the natural gas trucking space. So, all things being equal, as the price of oil goes up, natural gas seems to be a marginally cheaper option to fuel trucks with. Now, recently, that correlation seems to have been broken. I hear you guys talking about $200 oil, and with all of the, instability going on, one would think, based on the last 10 years, if oil's going to the moon, then it drags natural gas, in particular this space, up with it. Since that doesn't seem to be the case, I'm wondering if you guys have an explanation for that. Is it because electric vehicles have gotten cheaper?
Yeah, hold on. Shabam, are you there? Shabam?
Yeah.
Yeah, Shabam, the question is, I can take it, but you're much smarter than I am on this. Can you speak to, the question was, nat gas and oil used to correlate pretty closely. Now they're totally out of whack. Why has the oil price gone crazy and natural gas not so much? That's the question.
Sure, yeah. So one of the biggest reasons is the development of this hydraulic fracturing technology, which brought all this shale oil online. There's only so much oil that was there to bring up. Shale oil is not oil. It's gas wells that produce a bunch of oil with it. So there's been this huge plethora of gas that that basically sits underneath the U.S. and they've got pipelines, they've got infrastructure to get it all over America. So basically, there's so much gas there that as soon as the price goes over $4 or $5, you can bring a whole whack of gas online pretty easily. But oil is completely different because there's only so much oil you can bring online. The wells decline a lot. And like I said before, you got to export this oil and bring in the heavier oil. So it's just a whole mess. Whereas natural gas is natural gas. It doesn't matter really what the blending components of it is. So within America and Canada for that matter, hydraulic fracturing has completely changed the landscape. And there's so much gas underneath America. Like if the Northeast kind of figured it out, like New York and Boston could have the cheapest gas. Like you could basically give it away for free and still make money on it. So it's just a supply demand that's changed in the last 10 years with
Thanks.
hydraulic fracturing.
Thanks, Shaban. That's brilliant.
So, sorry, quick follow up. So, if supply has exploded and gas is even cheaper now, shouldn't natural gas fueled vehicles be an even more appetizing alternative to oil?
Yeah, and that is the case. If you look at India and China, they are putting compressed natural gas all over the place. It's just America, there's so much bureaucracy and red tape around getting all this stuff into fruition. It's just going to take forever, and it's never going to happen, unfortunately. To tell you the truth, it's just way too much nonsense and NIMBYs and all this other stuff going on. It's just my opinion anyways. I don't know, Javier, if you have a better opinion on that.
You hit the nail on the head, bud.
Thanks, Shabam. Always brilliant.
Thanks,
For
guys.
that, J5. We're going to do Raxi and then Max Niz. Raxi, what's up?
I appreciate you guys. So definitely some good points you guys raised. Definitely don't see oil stopping at any point in the future. That's just my personal opinion. But basically, my whole question is in the same space as the oil and natural gas kind of conversation. Do you think that some of these companies, I mean, just one in particular that I'm looking at, I don't know if you guys are familiar with it. It's called Vermilion Energy. And basically, I mean, they hedged their bets from, oil just in case with natural gas. But now it's like they're sort of double dipping in the market. So, like, do you think that these companies have capacity, like these smaller cap companies have capacity to scale in a way that would be kind of universal for the whole world? Just kind of something to throw out there, I guess.
Yeah, all right. So Shabam, I suspect this is kind of suspicious now. You talk, and then another guy asks a question. I'm thinking that you actually paid him to ask that question. So, Shabam, you want to give us like a minute or two on Vermilion, please?
Yeah, you bet. So, Vermilion is one of the most hated companies out there. They used to pay a 23-cent a month dividend, and then they cut it right down to zero in March 2020. They completely flipped out the management, so people were really unhappy with what was going on. And in late 2021, you could have it for about $10 a share. You could buy this. And right now it's trading about $20 a share on the US markets. And it's European natural gas. That's it. This company has so much exposure to this gas. They bought another field late last year from Equinor, and this company is going to set up to make so much damn money here in the next couple of years. You're right, 2022, they're kind of hedged a bit at lower pricing. But look at the 2023 and 2024 strip for European natural gas. It's gone up like 40, 50, 60, 80%. So, this is one that I don't have the equities. I kind of thought this was going to happen, not the Russia situation, but the European gas with their coal and nuclear nonsense that they keep doing there. So I bought a bunch of options for December 2022, and I'm laughing all the way to the bank. So that's basically, I'll leave it there.
Yeah, and just to follow up, George, I'm not paid by anybody, man. Like this is it correlated with the conversation that was going on. So yeah, no, that was absolutely no way.
That's great, perfect. Thanks, Rexy. I appreciate it. We're gonna do Max and then Charlie. Max, what's up?
Hi, I'm Max from Germany, and we are in a dire position here because
all right. Hold on. We are now going to have a seminar from Max. He is the resident European expert now. He's going to explain to us what's going on. So, Max, here's what I want you to explain to us what's going on with the energy prices there. What is the attitude of the people? Like, are they starting to realize this is all bullshit? Is there any chance they're going to, what do they think about the Ukraine, et cetera, et cetera, et cetera? So the floor is all yours, but we very much want to hear what you have to say. So Max, go ahead.
No, the government, it's a left green government or a red green government, and they are very aggressive on Russia, and they had the agenda that we stop all nuclear power plants, and now they're thinking about to reactivate or stop the shutdown of the remaining nuclear power plants. And where I'm located in Hamburg, in the north of Germany, they also stopped the shutting down of the coal power plants. And yeah, but I think it's not enough, because our electric grid is so reliant on these renewable power plants, like wind turbines or solar systems. And in Germany, it's the case we rely so heavily on natural gas to that's called Windflaute, when there's no sun shining and no wind blowing. So then we have to
So Max, I want to ask you a question. What is I know you got the Green Party and all this craziness, right? But what is the average person in the street starting to think now? Do they realize this is completely fucked up? Like, are they starting to get pissed off?
No.
No?
No. They don't realize the shit in what we are in, because the German grid is endangering the whole European grid because of this whole renewable energy. Because in the top times when the sun is shining and the wind is blowing, we are consuming, I think, 40% of our power consumptions from renewable energies. But when there's no wind blowing, no sun shining, we are importing from the French nuclear power plants and the Polish and Czech coal plants. And this is not reliable. But this propaganda in the media that this is sustainable, this is totally crazy.
So Max, let me ask you: do you live in an apartment or a house? Where do you live?
I live in an apartment.
And I'm just curious, how has your power bill, your electricity bill, how much has it increased in the last year?
From 50 euros to 100 euros, and then I switched the supplier, and it went down to 70 euros. Because this one was virtual signaling this before, and they want to rely on this renewable energy.
Right. Now let me ask you. Let's switch the subject slightly. So let's talk about the Ukraine.
Yeah.
And what is the attitude of the typical attitude of the government and the attitude of the man in the street with respect to the Ukraine situation?
Now this is very difficult. We have Russian supermarkets. It's a supermarket chain around Germany. It's called Mixmarkt. They are selling only Russian products, and they were attacked around Germany. They smashed the windows or paint bombs, and it's very difficult here because we have it's called Russlanddeutsche. There were settlers through the time where Catherine the Great was emperor in Germany, in Russia, and there were a lot of settlers from Germany went to the Volga region, and during the Soviet era, they were coming back, and yeah, it's a very difficult time for them in Germany, and yeah, the hatred is very big against those peoples. Yeah. Yeah, and they're in the media and also in the public. There's very small differentiation about whose fault is this conflict, and that's very sad here in Germany.
Max,
So,
that's some good insight there.
yeah. So what is your own? What do you think the German government? It seems to us, if you were listening in the room before, and I think you probably were, people were telling the story of how the European countries are all screwed up now because Russia has them by the balls with the energy. So, would you disagree with that, or would you agree with that?
And I think we are screwed up because there's a town Stade in the north. We don't have the capacity to get this LPG tankers. We don't have this, and our government is just saying, yeah, if it's not too cold anymore, we will we'll go to this winter without any Russian help. And Germany was also very very government hearing during the COVID crisis, and it's so terrifying how this switched with this Russian crisis. So the narrative was just
So
taken
Max,
over.
Max, we're learning so much from you. Does anybody on the stage, any of the other speakers, have a question for Max? Because I think we're really privileged to have Max here. Are there any questions for Max? Dave?
Yeah, Max.
Dave Gollum, or somebody, or Prodigal?
It'd be quick.
Max?
Max, what is German media like Bild and other channels showing in regards to the Ukrainian conflict? Is it trying to make Germans move towards more interventionists in the conflict, or are they trying to be objective and talking about these fuel and food concerns?
No, they are not objective. No, absolutely not. There's the sender, the TV station Bild, and I looked at this, and this was so obviously propaganda. They showed an old Ukrainian woman in this ghillie suit, this from the snipers, and it looked so staged. And no, this is nothing objective. And here in Germany, you can't receive any Russian information. It's all blocked, and nothing objective.
Wow. Who else? Anyone has a question for Max? Please just speak up. You don't have to be recognized. Just speak up.
Hey, Max. Just a quick question for you about news sources. I've seen like DW sometimes on YouTube. Yeah, are those reputable? Or, like, what news sources do you trust out of Germany?
None.
We're all in the same boat then.
No, but yes, because of the propaganda during the pandemic, and
Wow.
Denzel Washington said it. If you
There
if you
was
don't
there was
if
no hesitation. There was no
yeah
hesitation on your with your answer, man.
no but no but if you don't yeah view the news, you're uninformed. If you view the news, you are
Misinformed.
misinformed. Yeah,
Is that a Denzel Washington quote?
yeah.
Love
What
it.
was the quote? Yeah, what's the quote again? I didn't catch it. What's the quote? Please repeat.
If you
Yeah.
don't read the
If you
news, yeah.
if you don't view the or watch the news, you're not informed. If you're uh, watching the news, you're misinformed.
Love it.
I
I'm,
like
I'm,
that.
I'm,
Yeah.
I like that.
I got to tweet. I got to tweet that out. I got to tweet that
Hey,
out. That's
by the
great.
way, guys, just a little housekeeping here. We got a lot of we got a lot of requests to speak here. This room is just a lot of good information here. So if we bump you down,
Yeah.
don't panic. We can always
Here
bring you up. So
here you created a monster here. I mean, who knew?
well,
Like 2 hours ago, it was you and me and spitballing on the phone. Now we got over
right.
600 people here going at it with some really
Well,
unbelievable contributions.
yeah, and you know what? There's some great intel here. I would encourage anybody to to speak up. There's a lot of good people in here that can answer questions. So fantastic. So bear with us here. We're going to move some people around, and then we'll add some more folks in here.
All right. So Neil hasn't spoken yet. He's got his hand up. What's up, Neil?
Hey George, phenomenal room. O'Hare, phenomenal as well. Great to hear from you, experts. I'm a doctor and professor at Johns Hopkins, and the information you guys share helps everyone. I really have benefited from it as well. My question deals with the interplay of global capital flows with inflation in the United States, and potentially how fiscal and Federal Reserve policy might get changed going forward. It seems like, based on the insights of Javier and many others here, that the ability to backfill the oil supply in Europe is going to be a significant issue, and that they may get hit the hardest. And if that's the first domino to fall in what looks to be a global recessionary environment that's impending, do capital outflows from Europe into the United States and the potential slight cushion for the dollar there help the Federal Reserve in managing increasing oil prices and other issues with the economy?
Good question. The dollar has risen against all expectations a few months ago. Actually, if you go back a year ago, the slam dunk trade was the dollar was going to go to zero. That was, I'm exaggerating, but the idea was going to go down a lot. That was a consensus trade. Totally wrong. With the intensifying, and the dollar was strong before this conflict broke out, as we were moving into a more risk-off environment. The dollar is viewed oftentimes, believe it or not, as a safe haven currency. So money was fleeing some of the more distressed emerging markets into dollars. And now what's happened in the last few weeks, as you rightly point out, money has been fleeing Europe and going into dollars. And so, yes, to the import of your question, to the extent we have to sell, hundreds of billions and trillions of dollars worth of debt and bonds, and rates are extremely low. It's kind of a push-pull thing. On the one hand, these other places are less attractive. On the other hand, if you gone back a few months ago before this crisis really intensified, you might have thought the dollar should go down or might go down to attract more people to invest. But now the dollar is strengthening as a sort of risk-off idea. So, yes, it'll make their job a little bit easier, but it's not sustainable. And I'm just going to invoke something from my experience from 30 some odd years ago. I was a very big investor in Japan. I was at Fidelity at the time. And the Japanese stock market was supported by the so-called triple merit scenario. That is to say, you had falling oil prices, falling interest rates, and a falling dollar. So the money wouldn't go into dollars, it would go into yen. So you had positive capital inflows, at the same time falling oil prices and falling interest rates. I'd like to point out that we kind of have the opposite of that right now here. We have rising oil prices, a rising currency, was actually is a negative from the standpoint of corporate earnings. And we had rising interest rates. The only reason they're not going up more is because now we got this horrible Ukrainian situation to contend with. So higher oil, higher dollar, interest rates now going down for the wrong reason. None of that's positive for stocks. So you ask a great question. I think, one thing it wasn't implicit in your question, but I'm going to go on it anyway. As you look around the rest of the world at emerging markets, what was the old joke someone reminded me of the other day? They asked the old lines of why are emerging markets called emerging markets? That's because they're always emerging. I mean, you've got Turkey blowing up, Argentina blowing up, that Russia's blowing up. I mean, and so as screwed up as the U.S. is, oftentimes you've heard the overused phrase "best house in a bad neighborhood." So, thanks for the question, O'Hare. Who's next?
Okay, so Charlie was next, and then we'll go to DN and then Baron. Go ahead, Charlie.
Hello, everybody. Thank you very much for giving me the opportunity to speak. I have 3 points that I wanted to share with everybody. The first one is regarding the Venezuelan issue, and I think I've been watching online and in some news sources. Sometimes there's a little bit of a misunderstanding of why Venezuela is so important. It's not so much because of the oil. It's because the people who have been funding Venezuela's disaster and their bonds for the past, 7, 8, 10 years has been China. So the focus of the United States right now to broach or at least get a little bit closer with the Venezuelan government is because of spheres of influence. Right now, the United States is behind in that regard with Venezuela, and they need to be able to have Venezuela more on this side instead of on the Chinese side. So I would suspect that the United States will be fairly aggressive in trying to get Venezuela onto their side. It's not because of the oil either. If I could remind you that I live in Panama, and I'm a private investor. And I've worked in banks and different places for all of my time. And what we notice in Panama is that this is the Panama Canal. And I think some of you in the Canadian oil mafia would remember that some of the oil that the United States needs sometimes, since there isn't a pipeline, they take it around, they put it on a boat, and they go through the canal and take it up to the East Coast. So that is partly why the Panama, and for me, is very important. That's why Venezuela is so important, because you can't have a belligerent country that reminds you of the old of Cuba, where you can have you already have Russian soldiers in Venezuela because they're the ones that help and train the Venezuelan military and control their drug economy that they have that holds up that government. I wanted to jump into part 2, which is what I'm looking at with silver and gold. I'm 100% silver. All I do is I buy SLV as much as I can when it goes down, for the simple reason, when I look at the ratio, and I can look at a lot of different things that are going on in the world, and this is the one thing that always comes back to me in the past month, is that in times of fear, and the dollar is going up, that's telling you that there's a large geopolitical imbalance and fear trade going on. And the only things that really make sense, I mean, you can talk, oil is good, it's fine, it's the principal tool right now of geopolitics. But when I look at the silver gold ratio going back to 1975, and I look at how silver, that ratio right now is trading at a support level that goes all the way back to 1980, 86 or so. So I always go back to this thing that, okay, if there is a fear trade that's going on that's going to last a few years, the easiest thing for me to do is just load up on silver. And I don't do anything with gold. And I also, the third thing that I wanted to mention is going to that comment about euro dollar deposits. And it's exactly what you said, George, is most people expect, okay, if oil and all these commodities are going up, the dollar has to be going down. But the issue is not inflation. Well, yeah, it's inflation, but it's the issue that we're living right now is much larger than just any one country's inflation. It is a what do you call it? A survival. It is something that goes much more beyond any one nation's fear of inflation or how you manage your currency. Right now, it's the dollar that has to be bought because it's the one currency that's stable. It's not a, let's say, for example, that is not easily thrown away as we're doing with the ruble. You know, it can't be sanctioned off as a ruble would be. Okay, thanks. That was all.
George, if I can just jump in for a second. So, Charlie,
Go for it.
you said
Go
you were
for
in
it.
Panama, right? So I'm just curious. I mean, what success do you think that the U.S. is actually going to have with Venezuela? I'm sure you're familiar with Latin America. I mean, China just signed a deal with Ecuador. Just signed.
Prodigal, let me
Yeah.
cut you off. Let me cut you off. Save it. You have a bad connection. I'll make it easy for you. 0. Does that answer your question?
That's what I assumed.
All right. Next. All right. Where are we here? Sorry.
Shall I pop in?
Sorry. Who was that?
I'm Vlad. I'm from Latvia.
Yeah. Oh, Vlad. Welcome to the stage. What's up, man?
Thank you. I'm fine. Hope Putin hasn't found Latvia on the map yet, but yeah, we are a bit worried. I have maybe 2 questions. The first one is maybe rather political. Like, if Biden knew weeks ahead that the war is coming, like, why didn't he do much to prevent it? Like, any people in the US are wondering about it, or and the second question is about China.
All right, stop. Hold on. One question at a time. Let's take the first one. So do you want the real answer, which is conspiracy answer, which is what I believe, or do you want bullshit answer? What do you want?
No, rather conspiracy.
Okay, all right, okay,
like not...
all right. So the conspiracy answer is, and I actually believe this, and we're gonna take these questions one at a time because I'm gonna give an answer, and then I want Prodigal and Dave Collum to give an answer. So one of the crazy theories, crackpot theories that I've read, which I believe, is that the U.S. actually brought this on, and almost in a way they wanted it. That if you go back 2 months ago, they sent Kamala Harris, who I'm going to have to really control myself here. They sent Kamala Harris to this conference. Here, you know where I was going with that. They sent Kamala Harris to co-hair. I'm getting you up as a co-host again. They sent Kamala Harris to this conference. I forget when it was. And, she's opening her mouth and going on about NATO and blah blah blah. And they knew, and what NATO was. Ukraine should become part of NATO. And it's well known what Putin thinks about Ukraine joining NATO. He said it many times in the past. And so they sent her. It was like a direct provocation to kind of push his buttons. And if you want to be really anti-American, you'd say, it's deliberate. We're very good at starting trouble in various places. And I don't know how far conspiracy you want to get, because, if you want the full conspiracy, it's almost like they wanted to have the confrontation because, what do presidents here in this country always do? They start trouble elsewhere to deflect attention away from domestic problems. So that's the conspiracy theory view. And to me, it's the one I believe. There are other dissenting views. I don't know if Prodigal or Dave Collum in particular, if either of you have any answers for Vlad. Prodigal or Dave, are you there?
Yeah, I don't think there was much he can do. I agree with George to an extent. You saw the messaging for renewal and climate change and BlackRock going in and Citigroup say we're not going to do business with you. So they were basically in a catch-22 in regards to pursuing their green energy plans while Ukraine popped off. He didn't have much credibility. America and most of the world is still divided due to COVID restrictions.
No, but Prodigal. I think the question is, how did this whole thing come down? I mean, in my conspiracy theory view is the U.S. kind of wanted it, all right? Like, there were a lot of conversations behind closed doors. How did it come to this? Like, what did the U.S. do or not do that resulted in this happening? That's the question.
I mean, what you said. I mean, NATO policy. In addition to Kamala, who I think is the border czar and the space czar, sending her I knew was a death kiss. But this just the policy has been bad, and I don't know if it's been on purpose or for what reason. But once Zelensky, for me, the massing of Russian troops over 150,000 showed there was going to be an invasion, and Zelensky did two things that, to my opinion, forced Putin's hand. The first is when he said they were going to re-engage with nuclear energy in their nuclear program, and the second was when he called his reservists, but then he was stupid and didn't do a full mobilization. I think those two were the moment. Those two things Zelensky did cross the Rubicon, and America just didn't control Zelensky. We gave them, we encouraged this.
All right. Okay. Now, I already had a lot of Twitter flack today. Now, okay, I'm really going to mix it up, okay? Someone said to me this morning, and it actually kind of resonates with me, Prodigal. I don't want to get into politics, but here we go. So, Prodigal, someone said to me this morning about Zelensky, he's kind of like the Anthony Fauci of Ukraine. What would you say to that?
Yeah, I mean, I read his polling was at historic lows before this. He ran as a peace candidate, and then he got sucked in by the far right of Ukrainian politics. I mean, he's not. He might be beloved right now, and his country's rallying around the flag effect, but he was not beloved before this. He was not.
No, I like the one. He's the Anthony Fauci of the Ukraine. That one really resonated with me. So, Dave Collum, do you have any thoughts about how we got into this mess, Dave?
I have thoughts. I'm not sure they're very deep. I'd also like to hear what Doomberg has to say. He's a wise guy.
Well, if he'll come up, is he in the room?
He's in the room, and
you know what? Like, he's worse than you. Like, I tried to get him up yesterday to come up, but he's like on this desktop. And I said, no, you have to use a cell phone. He kept saying, no, you can use it from a desktop. So he never came up. So I think he's using that to hide. Hopefully we can get him to come up because he's a really smart guy. We want to hear from him. But Dave, if you could talk a little bit about how do you think this whole thing came down? How do we get to where we are?
Well, I have a lot of bullet points. I'm getting a lot of fights on Twitter, and I'm now a Russian troll, Putin lover, apparently. We've been poking at Putin relentlessly for 5 years now. So every single thing that went wrong, Doomberg may actually know this. Back when the Skripal poisoning occurred, I was the only organic chemist out there going, this storyline is complete bullshit. So they're saying this has to be Russians. I went out there. I ended up all over. I was getting calls from Al Jazeera and you name it. I was the only organic chemist saying this nerve gas you guys are blaming Russia on could be made by a sophomore in my class. And so we've been doing this relentlessly through the Trump campaign. So if I were Putin, I'd be pretty pissed off at this point. I think it's safe to say that anyone with a half a brain knows that Ukraine is a hot button issue. And the last thing you do, especially if you've been married for many years, you stay away from hot button issues. So if we're pushing Ukraine into NATO, we're trying to make it look like we're pulling them in. It's just a very inflammatory thing to do for which there's no upside. So yeah, it feels like we're doing something intentionally. And it feels dead wrong to me. And I think last year, the year before, I said these guys are playing a very dangerous game. They're using Putin as a political football. What kind of crazy is that? So I've been blaming the West for doing this for the last few weeks. I didn't think Putin was going to bite. He seems to have. But here's the second thing. I don't believe shit about what we're seeing on the news and the footage. I've been watching for footage, which I can say, look, that's a real war. Saving Private Ryan footage. I've been looking. And if you look carefully, the footage is always after the fact or some distant explosion that you don't know what it is. You don't know who blew it up. Someone said, well, CNN, for example, was interviewing some guy and there were explosions in the background. I go, so you don't think CNN could get some guy with a couple of weapons to blow some shit up in the background to make it look cool? Of course. Hey, get out of here. Go. So the whole thing has a wag the dog feel to it, even though I know that Putin's in Ukraine. I know that things are happening, but it doesn't feel right to me. And so I have this funny feeling that
that once again, we can't trust the narrative. And I can't think of a narrative that we've gotten in the last 10 years that I believe at this point. So I don't see why I should start now.
Yeah. All right. That's great. So Dave,
And
just hold it there. All right. So Vlad,
and
hopefully,
my
Vlad, hold on. It's going to be your turn. So we answered your first question, which was not an easy question. What is your second question, please?
my second question is more about investments and making money. Like now, everybody is scared of China because of real issue with Taiwan, and I think in my opinion, they'll be scared of invading Taiwan right now because of sanctions and swift response to them, and they are more involved in the world's economy. Um, do you think China, also from a monetary response right now, China is actually lowering the rates and supporting the economy? Do you think? Do you see more potential of China's exporting of microchips, for example, sector, dealing with Russia, and since Russia has been blocked from Western world, like do you think there's might be more potential in China, in investments in China? Although it's quite it's quite risky
Yeah.
to invest in emerging markets and
Yes.
everywhere.
Yeah. So let me answer that, and here you follow if you want. I have two thoughts. One, and I tweeted this out yesterday. It was one of the tweets pretty much everyone ignored. I thought it was hilarious. No, hilarious. I thought it was great. Well, let me just find it here. My friend Ken, who's actually been in our rooms before, he follows emerging markets. He actually was a speaker a few weeks ago. He tweeted something that he sent something to me, and I actually put it in the Twitter. Let me just find it here. Where are we here? Hold on. I can't find it. I don't know where it went. Anyway, he was talking about how um, Xi Jinping has a chance now to be the hero. That it was drawing, just like in the James Bond movie. I think it was a film clip from Goldfinger. It shows James Bond, breaks in. I think it's in Fort Knox. He breaks in. Here we go. I found it. He says it's a scene where James Bond is defusing a nuclear bomb. And he says, it's an opportunity for Xi to save the world and become a peacemaker hero. If I was Xi Jinping, I would wait until the last minute when the countdown clock is ticking like in a James Bond movie and defuse it just in the nick of time. I mean, look, China has a lot of leverage over Russia, no question about it. But and China's obviously watching very intently what's going on with Taiwan. And I really hesitate to talk too much about this because I'm making fun of everyone who thinks they're a geopolitical expert. So who am I? But I think the Chinese are probably paying very close attention to the way the whole world is pushing back against Russia. And if we get a financial collapse, global recession, that's not going to be good for China either. So on the one hand, China's saying, well, wait a second, Russia's pulling this stunt. The world really hates them now, and this could lead to a recession and financial crash. That's going to hurt us. On the other hand, there's no question that that China is talking to Russia. Who knows what reassurances or financial support China is providing, or maybe buying commodities or whatever. Russia cannot be doing this without China's implicit support. What's his name? Putin went to visit China before during the Olympics, and when you think about what do China and Russia and Iran and all the other bad guys have in common, the undermining of U.S. dollar hegemony, and actually the Europeans wouldn't mind that either. We have a stranglehold. We have a lock in the global financial system, and that's a huge weapon, a huge competitive advantage. And so if this could be a situation where, and maybe we're triggering this ourselves, like you've seen, now all of a sudden, the Russians thought they had 300 billion in reserves in the SWIFT system, and they can't get their hands on it, blah, blah, blah. Maybe this will actually be the thing that triggers the emergence of a competing payments network. You got the Russians and the Chinese, and who knows, maybe the Indians and the Iranians. And this could actually hasten the demise of the U.S. Hegemony in financial markets. So there's something here for everybody. I think it's a very tricky situation. I do not believe Chinese financial markets are particularly interesting right now. I think for the same reason most markets are not interesting. Yes, there's been some relaxation of the Chinese monetary aggregates. Please follow cross-border capital. It's cross-border, one word, cross-border capital. Michael Howe, I've known him over 30 years. I keep retweeting his stuff. He is the best guy out there on global liquidity. And he's been maintaining the position that the Chinese, they would provide enough liquidity to kind of support the economy from total collapse because of the Evergrande real estate disaster. But they didn't want to really pump up the economy. They're trying to rebalance the economy, et cetera, et cetera. However, in the last numbers we got from China, it did show a nice increase in some of the monetary aggregates. So it's too early to tell. But Michael, who is much smarter on liquidity and monetary policy than I am, has been saying he does not believe the Chinese wish to stimulate their economy very much, that they're trying to rebalance their economy. So I don't know. China clearly, you ask a very good question, but it's very hard to answer. Hopefully it makes you think about it. My answers make you think about it a little bit more. But I think it's a very difficult situation here. Did you have any insights on that? Or Abe, I see you're up here. Maybe I don't put you on the spot, but you study world markets a lot. And specifically, we'll get to your question later, but do you have any perspective on Vlad's question about China?
Well,
I do.
George,
I do actually. I don't think it's
That's
in. I'm sorry. I
oh,
don't think it's
Abe.
in. Yeah, it's Abe.
Go
I don't
ahead.
think.
Yeah, Abe, the floor is yours. Go ahead, Abe.
Okay. Yeah, I do. I don't think it's in China's best interests at this time to do anything with Taiwan. In fact, this is going to sound completely strange to many. They already have Taiwan. They've essentially going to. They're going to drown them very, very slowly over a period of time. There is no geopolitical interest for them to invade Taiwan. If they did, I would be in a state of utter shock. I throw myself over a bridge. How's that? That's how much I don't believe that. I believe it's actually a bit of a red herring and nonsense. I think the real issue, and it's deflection, the real issue is that, and someone had mentioned this and made a very good point, that China will end up being the world broker because my own personal preference is that, from a geopolitical standpoint, China is the leading emerging superpower. Whether we want to believe it or not is another matter, but they will jockey and reposition themselves as they are even in this conflict. So I'll leave it at that. Other than one last little tidbit, NATO met over the weekend, and Stoltenberg basically came out and said, "quote unquote," this is not our war. In response to the Ukrainian president's request to cover Ukraine as a no-fly zone and also provide heavy military equipment. So I think that speaks volumes, and I think from there you'll understand the intent and the total conviction of NATO to intervene in Ukraine. I'll stop right there. Thank you.
Thanks for that, Abe. Does anyone else have an answer to Vlad's question about China? David, or anybody? Otherwise, we'll move on.
Can you repeat the question, please?
Yeah, Deanne, did you want to answer Vlad's question?
Yeah, Vlad, could you please repeat the question just so I get all the details?
Well, no, Vlad, if you want to speak, it's different. We're just on China right now. What do you view as China? I mean, if you don't want to speak about China, just hold your fire because I'm trying to process this.
Yeah, I mean, I'll jump in real quick. I agree with Taiwan, right? If they're able to infiltrate Western governments, they're very infiltrated in Taiwan, right? There's been reports that they've even gone so close as the president's security detail. There's a reason why there's a push now to build chip manufacturing in Ohio, Texas, and other states, right? China is not going to move on Taiwan. I don't think it needs to, but if it does, then the world order as we know it is over. At that point, they have rare earth minerals, and precious metals. They have a large manufacturing base. They have one of three financial cities in Hong Kong, Taiwan, and London, and then they will have, the world's manufacturing chips, which we're seeing the delays right now, and everything from ovens to cars.
Right.
So I don't think they need to do that. I think that if you look at what they've done, especially with the Beijing, the genocide Olympics, the amount of deals that they've closed with Iraq, with Syria, with Iran, with Serbia now. I mean, it's astronomical, and their Belt and Road Initiative is working fine, and people don't realize that with that, those financial and economic agreements, as they phase in, they can start switching them to yuan-denominated, debt and currency. So, this is something where China doesn't need to rock the boat. It can have Russia as its satellite pit bull in Eastern Europe while it continues to conquer the globe with its money. Right.
Thank you, Prodigal. All right, I just want to just say it's my intention to close this room. O'Hare, unless you want to keep going, we're going to close this room in a half hour at 6:20. If you want to keep going after 6:20, O'Hare, it's up to you. But I got to leave at 6:20.
Yeah, I got to hop in a little bit too because I got to take my kid to the gym and do some working out.
So with that in mind,
we got a lot of people here requesting.
Yeah, I know, O'Hare. So we're going with a hurry up offense. We're giving a 30-minute warning, not 2-minute warning. No speech and a question. We're going to keep it tight, and we're going to move quickly.
Maybe just my last two comments.
Yeah.
Basically, what I wish, and I think the potential for the US is to finally to apply diplomacy to embrace Russia like Clinton did, and to find a compromise for this war, and to appear finally as a world leader as it should be. And my second wish, if there's somebody from Argentina or Brazil, two agriculturally strong countries, I would like to hear about the situation there.
All right. So Vlad, I thank you for that.
Thank you very much.
We're going to move quickly, and if you're thrown off the stage, it's because we got to get more people up here. Charlie, do you have a question? Otherwise, I'm going to throw you off the stage. Charlie?
No, I'm good. Thank you.
All right, thank you. I'm going to put you back in the audience if you don't mind. Hold on. So, DNA, you got a follow-up question?
Yeah, just wondering on the chessboard where we're at this point. Because you look at South America, the Russian/Chinese alliance has Venezuela in its pocket, and they're getting Brazil because Russia's allowing them to consume fertilizer, right? You look at the Middle East, all these countries are now basically going to Russia and saying, well, we're done without your wheat. We need to buy your wheat.
Right.
So on the global chessboard, how would a Chinese denominated currency ever become reserve currency? Not
right,
that I'm
so DN. That's a seemingly simple question, very complicated answer. It's a great question. I just don't want to get into that now because we only got 27 minutes.
Yeah, I mean, George, you don't even have to, right? Because it's not going to happen overnight. People think that it's going to be a switch.
Prodigal's got it right. It's later rather than sooner. China's not ready for a Chinese currency. Okay, so let's just leave that one, DN, if you don't mind. Robert, you got a follow-up question? Robert?
Yes, just two comments. One on the whole U.S. interest or NATO interest with Ukraine's war, and the video that you posted yesterday of Peter Zeihan. He mentioned, however this started, whoever wanted this, it is pretty clear that it's in the best interest of NATO for this to go on as long as possible. Russia is gonna, they want to make basically Russia bleed as much. I mean, we all don't know what's true, what's not true, but it's beneficial for NATO to have Russia being occupied with the war in Ukraine. So I think from their perspective, they want this to go on as long as possible. Second point I wanted to make after Max from Germany spoke. I'm originally from Germany. I'm up in Canada now, which I couldn't be more happy about, to be honest. But even if Canada is not ideal, but I wouldn't want to be in Europe right now and in Germany especially. On the situation there, I still have contacts, of course, and family and stuff. So from talking to them, I think they're running into the same exact thing as they did with the renewables. They're listening to all the virtue signaling, posting their Ukrainian flags and screaming all in support but still missing the bigger picture. I think it was pretty interesting that they all jumped onto like, oh, let's take them off of SWIFT, let's punish the Russians and blah blah blah. But no one has any idea what the consequences of this are, and they're just blindly following whatever the leaders are kind of, whatever the mood is, whatever is hip or woke right now. So I don't know. This is very difficult because, as Max said, there is pretty deep Russian ties. But
Yeah. Robert, if you don't mind, excellent point. I totally agree with you. It's like with so much other crap that's coming out of our leadership here in Washington, there is no leadership. They're just fucking making it up, and they're woke as hell. And unfortunately, we're all going to pay the price for that. I appreciate that, Robert. Sorry to be so brief, but I really want to get the other questioners. I really
no worries.
appreciate your input.
No worries.
I really appreciate your input, Robert. Baron, you got a question? Go quickly, please, Baron. Baron, you got a question?
Yeah, you caught me off guard, but it's not about China. So if you just want to stick to that topic, I'll divert. I sent you messages about it, but what we didn't touch on is about chip manufacturing, how important that is lately, at least, and how Russia now controls, the palladium and neon supply for, over half of it, neon supply for the world, and how the impact of that's going to be.
It's a huge problem. And actually, you know what? I want Abe to talk about this.
Sure
not so much about semiconductors. Okay, it's not really what's interesting. What's interesting is Abe and Three Aces, who have a lot of experience trading international markets. It's all these little things that happen. Like Abe will tell you a little bit, and Abe could go to a brief summary of what he said. Abe deals a lot in international metals markets and steel and all this other stuff. And so you make a great point about the neon. I'd read about that Ukraine we're supplying 50% of the world's neon supply. But there's so many other markets, commodities, widgets, this, that, and everything else, where they're like second order effects that no one's even thought about. The headlines are grabbed by energy and grains. So, Abe, could you just talk for a little bit about the dislocations you're seeing in some of the markets? Because you're very active in that part of the world, Abe.
Yeah. So Ukraine's, again, one of the largest manufacturers of or producers of iron ore, coal, wheat, all kinds of metals. I mean, it's just a huge, backyard of commodities. What's happening is that you're seeing large, very, very large companies that are exporters to China, okay, for these raw materials have actually gone offline. In the process, all of the other feeder mills that they feed in Eastern Europe are also going offline. So Latvia is now slowly going offline. Belarus is completely offline. Moldova is not accepting orders. Turkey's not accepting any additional orders. So you're starting to see contagion, what I would call, kind of counterparty risks in terms of not just credit, but also in terms of actual supply. So once they go down, and I'll give you an example. Last week we saw the price of wire rod as an example that feeds into everything from construction to rebar to you name it. That had gone up 22% in a span of 3 days worldwide. This is global now. So you ask yourself when people say, gee, Ukraine, it doesn't really have that much of an impact. It's Russia's $1.5 trillion in terms of GDP. And I ask myself, or I ask everyone here, if it's so inconsequential, how the hell did it move the steel price 22% in a span of days? And tomorrow morning when I get up, I'll probably have 10 conference calls and I'll be literally putting out fires in terms of, repricing almost everything that has been sold already. So that's what's happening from a global perspective. The supply chains, if they were screwed before, now they're 5 times more screwed.
And so, Abe, what you're describing, and we're going to move along here, was a great question. But what you're describing, Abe, I imagine is happening in like so many different markets. It's just you got this finely tuned global economy, and you upset one thing, and boom, everything else gets screwed up. So, thanks for the question. Really appreciate it. Abe. Stay up there because there's going to be more coming your way. All right, so we're going to go to Cardi. Cardi, what's up? Cardi, are you there? I don't know where Cardi went. All right, let's go to, hold on, I'll get some more speakers up here. I want to get through again. We got the 20-minute warning now. We're going to close this room at 6 o'clock. So, sorry, 6:20. So everyone keep that in mind. So let's go to Cardi's not there. Let's go to Maggers. Maggers, what's up? Cardi, you there now? All right. Okay. Well, if you're up on stage and you want to talk, raise your hand.
Hey,
Travis, no, Maggers, hold it, Maggers. You had your chance to come again.
so,
Travis, your hand's up. What's up, Travis? Travis?
yeah, we've talked a lot about all the things that could go wrong. I kind of want to flip it and see what would it take to go right to make you feel we're going in the right direction.
All right, stop. For me, like, Putin gets bumped off, likely. The Biden administration offering an off-ramp to Putin that he can accept and save face. That'd be the sensible thing to do. I don't know. Those are my first two things. Abe, Dave, O'Hare, anybody else on stage have an answer to that? Dave C. or Abe, any thoughts?
Well, I would just
what
say,
could go right?
Yeah,
Sorry.
I would.
Go ahead.
Oh,
Sorry.
Go ahead.
Abe, go ahead.
No, yeah, go ahead.
Abe, go ahead.
What would go right? I'll tell you what could go right on a realistic level. Okay, some dose of reality here. That this come to a diplomatic close immediately. I'm talking immediately, and we get some decompression from in terms of total. Put it this way: we allowed diplomacy to kind of take form. We give Russia an honorable exit. We have to accept the fact that likelihood of them leaving parts of Ukraine that they've taken over is silly because they're not going anywhere. And we find ways to demonstrate some real global leadership coming from the West, primarily from the Biden administration, so that they too can get what I would deem an honorable exit. Because I think honestly at this point, they have lost. The Russians are going to get skewered, but at the end of the day, if they've achieved the outcome, who gives a shit? They've achieved what it is that they wanted to achieve. So the question is, what is it that you think will provide a good exit, and how do you define that exit? Is it from a markets perspective, stability perspective? There's a million things that you'd have to look at. But in my view, the best thing could happen is a quick end to this.
Yeah,
Well,
Abe, let me just pile onto that, and O'Hare, you jump in.
Yeah.
I mean, I think for starters, you got to give them some language about we're not going to force or we're not going to allow the Ukraine to join NATO. You don't get mixed up in the internal affairs of Ukraine. If maybe there's some deal where Ukraine has to give away part of the country or whatever. I mean, you got to give him something where he can claim a win, and I don't know what that looks like.
Well,
O'Hare, you have a thought on that?
Yeah. Listen, you have to step all the way back to where does Putin come from, right? He comes from the old Soviet Union. He's a former KGB operative. This guy is trained. He's a ruthless, dictator is what he is. And I just don't think that we're going to be able to negotiate with him, and partly for two reasons. One, obviously, the nukes that Russia has, but that's a non-starter for everybody. More importantly, it's the energy. It's the agricultural products. It's all the natural resources. Putin knows, and the people that surround him are very smart people. They know that they have Europe over a barrel. So I think it's going to be Ukraine or bust. I just don't think he's going to relent. I don't think we're going to be able to sit down and have a powwow with him and say, look, you know what, you get this part of Ukraine. They're going to go NATO on this part. Everything's going to be fine. We're not going to do sanctions. I don't think any of that's going to work. Already people are getting killed every single day. I mean, he's already devastated much of Ukraine on the east. So I just think he's bitten off way more than he could chew, and he knows that. I think a lot of people know that over there. So I just don't think there's a reasonable solution.
All right,
George, can I just interrupt real quick?
Yeah, no, KFAB, hold on 1 second. We have 16 minutes to go. I'm going to let KFAB make a comment, and then I'm going to reset the room. KFAB, thoughts?
Yeah, I just wanted to mention Globex opened. Crude is up $10, 10%. I'm sorry, and RBOB's up 8%.
Lovely.
Yeah. So and Brent was the futures at least were pretty disorderly. It was at a $5 or $6 bid ask.
What is gold up?
Gold is only up 1%.
What are the S&P futures doing, KFAB?
Down 1%.
All right. Okay. All right. Thanks. Okay. So let's reset the room. I really don't want to talk any more geopolitics because there are enough rooms on Twitter that do that. So the remaining 15 minutes, we're not talking geopolitics. If that's what you want to talk about, please unraise your hand. Do not speak. Okay, so we're going to do Maggers and then Jayesh and Travis. Maggers, what's up?
Hey man, sorry, first time using the room. I didn't notice the mute button was on earlier. So I run a small fund. Value commodities. Long gold, uranium, silver, natural gas, and oil. Basically, that's where I'm at. I don't know if you guys covered this earlier, but looking at how the likely outcomes here, whether there's almost no scenario, even with a ceasefire, that any of the commodities problems which are building up are going to be solved. So that's likely to keep going. The Fed have made it clear that they're basically going to hike at least, until it breaks. So I have this sort of feeling, this early late feeling in terms of, maybe a sort of this commodity explosion, but eventually the whole thing is going to bust into a deflation. And at the same time, I'm looking at Credit Suisse and Deutsche Bank's share prices and thinking, shit, there's something broken with this Russia deal, and there's going to be another, European bank blow-up. You guys, trade the markets, so it would be interesting to hear what your,
Maggers, I wish you were in the room 2 hours ago. We kind of beat that to a pulp in the first hour of the room.
Okay, sorry.
Maybe listen to the replay, and we'll do some more rooms. But I don't want to go back to that again. It's not fair to everybody else in the room. All right, so Jayesh and then KFEB. Jayesh.
Hi, George. Thank you for allowing me to ask a question. First of all, thank you for hosting such amazing spaces. The quality is far, far better. I can't express in words than what you even hear within some of the big banks. My question is on valuations now. I was reading this book by Richard Lawrence, The Overlook Investments. He made a very specific comment that China market bottoms when Hang Seng Index it trades at 1 times price to book. Now, that happened during the Asian financial crisis when the bottom happened, and currently Hang Seng market is trading at 1 time price to book at the moment. What's your view currently? Is this valuation in the China market suggesting a bottom, or any view you have per se?
Sorry, I had you on mute. Is your question about China or Hong Kong? What is it exactly, please? What's the question? What's the exact question?
So Hang Seng market, the bottom in the Hang Seng market. So some of your peers who were with you in that point of time investing, they talk about Hang Seng market making a bottom at 1 times price to book, which happens during the Asian financial crisis. It's happening right now. You see now investors would now be moving their money towards China after all this geopolitical thing that has happened and the attractive valuation away from Europe, US, and the likes.
Yeah, I don't know. I just think we're in a risk-off environment, and I'm not. I think those who are expecting China to unleash a big liquidity boom to prop up their markets, I think they're going to be disappointed. So I've been out of Chinese markets. I still am. I'm not tempted. I mean, maybe it goes down less than the U.S. than the Western markets, but I don't know. It doesn't do much for me. So, sorry.
Well, can I just chime in there real quick?
Yeah, go ahead.
Yeah, I've been in so many rooms where the topic is China, Alibaba, and all these others. Here's the reality. You don't know what you own in China. There's plenty of opportunities in the U.S. There are thousands of stocks to choose from. I don't understand this appetite for China or even Latin America.
Here, you know what it is. It's part of his Jared Dillian Dilly Dirt Nap, and I put it on my Twitter feed the other day. He wrote a piece. It was entitled. I'm sure you saw it here. It's entitled "Degenerates," and basically, it's this propensity to do degenerate dumpster diving. RSX has gone from 25 to 5. Let's buy some. China's down. Let's buy some. Well, maybe it's there for a reason. So anyway, let's know. We're running short on time. I don't want to go down that rabbit hole anymore. So I think we answered Josh's question. All right, we're gonna do this in order now. We're gonna do Tempest, and then we're gonna do Tempest and then Archer. Tempest.
Okay, run a small quant fund out of Melbourne in Australia. Just wanted to share a little tidbit about yellow cake. Australia has.
Wait. This is not a democracy. You haven't been in my rooms. If it's to push a certain stock, I'm not interested.
No.
If you have a market comment?
No, it's a broader market comment because we don't enrich. We just have a large stockpile of it, but there's been a moratorium on enriching for many years. But last year, our Prime Minister pushed a little Trojan horse with the sub deal with the US, the uranium-powered submarines. And quite a few people in my circle now for some time have believed that it's a backdoor to try and allow us to enrich in order to be a substitute supplier for enriched for US and other mature markets. So I just wanted to add that just in case Russian and Kazakhstani supply drops out.
Thank you for that. Appreciate it.
No problem.
Archer, you're up. What's up?
Hey, gents. Just a question. Like, I'll keep it brief, but I'm by no means an expert on this market. But I noticed that the coal market's pretty interesting. I mean, Newcastle Thermal just blew through $400 last week, and all these companies are kind of beaten up from the last 10 years, like of ESG. And there's a lot of kind of good bargains there, especially with natural gas getting so out of control. It should like incentivize, I'd say, a lot more usage of coal. So I was wondering if anyone would had anything to say on the coal market.
Yeah, so coal is the worst of the worst in terms of ESG bullshit. Everything you say is right. The problem is it's been so ostracized. I mean, I remember 2-3 months ago talking to former CEO of the world's biggest, personal friend of mine, former CEO of one of the world's biggest mining companies, telling me how, if you're trying to get, they would be forced to divest coal assets because of all the ESG pressures. And the amazing thing was you couldn't find too many buyers because even the private equity funds, the sponsors of their funds have ESG mandates, blah, 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 blah. Fact of the matter is, and someone will correct me on this, probably Abe, I think I saw a stat, can't remember if it was German, UK, or European-wide coal production was actually I think up 18% or something like that for 2021. So despite all the ESG bullshit, when you don't want to freeze your ass off, they burn more coal. So coal is going to be one of these compounding things where I don't think you're going to get much in the way of valuation expansion because all the ESG bullshit. I mean, I think coal assets are very attractive, but they're kind of like the Rodney Dangerfield of the energy patch. They get no respect. So I don't know, Abe, you got any insights on coal?
Not really, other than met coal, because met coal will continue to catch a bid. But everything else, the regular shit, look, it's pretty simple. I think I mentioned this before. You'll get substitution if one energy source becomes way too expensive. So yeah, you'll probably catch a bid on just general coal. But I have to believe it'll be the first thing that gets pummeled with any retracement in traditional fossil fuels.
Yeah, no, I agree with that, Abe. So, here, I've totally lost track here who's left to speak and who hasn't spoken. I don't know. Is there someone that is next in line or hasn't spoken?
Well, we don't have any hands up, so I think I just think we got a lot of listeners in here. Anybody else have any questions?
Anybody on stage
Comments?
Anybody on stage have a question, or anybody else want to raise their hand? We got the James Bond clock is ticking. We got 7 minutes left to go here. If nobody, Abe, anything else you want to talk about? I mean, you got a lot.
No, I'm just listening to you guys. It's all been
good.
Well,
while we wait for someone else to come up, I just got to say something about the coal thing because we used to be in coal for a long, long time, and it didn't work out because a lot of these coal plays, not metallurgical but thermal coal, they were highly levered companies that ended up going through reorg. But having said that, I'm still a believer in coal. There's a lot of coal in the world. There's a lot of coal here in the U.S. A lot of coal being mined still to this day. The ESG thing killed coal. But let me tell you, coal today is much cleaner burning than it was even 10 years ago, 20 years ago, certainly. So with the advent of new technologies, scrubbers and different things that they're doing with coal, it's a much cleaner fuel source than people realize. So, there are some companies out there. I've tweeted about them from time to time. I won't mention them right now, but check out my Twitter. I may throw that out there a little later. But there are companies out there involved in this exact space that are going to do very well. India's still burning coal, a lot of places in Europe, all over the world. So I think coal may have a revolution in the not too distant future.
Thanks, Sawyer. So, hey, my friend, what's up? We've got 5 minutes left to go in this room. What's up, Sawyer?
I just wanted to acknowledge that WTI is at $130 right now. At the petrol station, the prices are taken off. They went from $1.70 all the way to $2.10. Certain parts of the population are going crazy over the price hikes, and this doesn't seem like it's letting up. So I just wanted to
Actually,
get.
Sohaib, there's this. Sohaib, could you help me here? There's this person, Kathy Wood. I think she has her hand raised. She wants to talk about whale oil and why
So
her
this is
forecast.
what's remarkable. Her price forecast was $12. We're at $129. So
Sohaib, can you let me know when those, and I'm going to curse now, those motherfucker weekly options trading setup assholes, okay, who with their Nvidia and their Tesla and their Rivians, they could shove it up their fucking ass, okay, all right. When those rooms cease to exist, then the top is in, okay. These motherfuckers still haven't gotten the memo.
yeah, what this is just the insane implications, right? There's people complaining about, just people are just staying at home. Like the cost of transportation is getting really, really expensive. Just the pressure doesn't seem to be letting up. It just seems like it's continuously on the rise.
So you know how it goes. Be woke and go broke. All right, August, you're up. What's up, man? August, you're up.
Yeah, back to refining. What refiners in the U.S. are geared towards sweet crude?
We lost Shaban. I don't know where he went. He's our guy. He's not here. Bring that question up.
Javier is here. Javier is here if he wants to come up. Javier would love to have you.
Yeah, but hold on. No. But he was anyway. So I don't want. We only got a few minutes left. I really don't want to go down a rabbit hole deep on energy because we're running out of time here. So August, great question. Bring it up in the next. You know what? You should connect with Javier, who's beneath you. He knows this stuff. Or Shabam, he knows this stuff. But in deference to the fact we only have 3 minutes left here and the size of the room, I don't want to go down that rabbit hole if you don't mind. All right, so we're going to do All Good, and then Tempest, and then Board, who I'm going to bring up. All Good, what's up? All Good, are you there? Okay, not there. Tempest, what's up?
Yeah, just quickly, one thing that's been completely overlooked with Crimea is that its water supply comes from upriver, and the first thing the Russians did when they got in there was they turned the water back on, because that warm water fleet, that warm water subfleet in Crimea is the only outlet they had to the Mediterranean and the Atlantic. So it wouldn't surprise me if we got a hot war, given that Putin talks to Erdogan more than any other world leader on the phone in the world, that they go after the Straits of Marmara and the Bosphorus. So that's a critical geostrategic choke point for them. It's their only warm water access for their subs and their destroyers. So probably look out Turkey if things really escalate.
Thank you for that, Tempest. And by the way, I lost track of all the tweets, but I tweeted something out the other day. There's a wonderful video I watched which explains, and I'm embarrassingly ignorant about the history of all this stuff, but I suspect I'm not the only one. There's a wonderful video. It's where are we here? I gotta find it. It gives a history of the conflict and everything. I'll find it and retweet it perhaps. But it pointed out in particular in Crimea the water issue that you mentioned. So
yeah, they've been bussing in water for years.
Yeah. So that's an excellent point. Really appreciate that. Excellent point, Tempest. All right, I think that's gonna do it. Unless I don't know. Well, God, Marcelos, anything you want to say? I mean, otherwise we're closing the room. We've been going at this for 2 hours and 20 minutes, and it's enough. I'm getting tired. So, O'Hare, you got anything to say? Abe, anybody?
I think we're good, man. That was fantastic space.
No, again, it was excellent.
Yeah. So hey, what do you got?
I just want to say, if you would allow me, just brief marketing. I'm going to be opening a room on $129 oil. If anyone's interested, that's it.
Got it.
Fantastic. So hey, I might hop in later about 2 a.m.
Yeah, I'll probably show up at some point. So hey, but my partner, you're gonna kill him. That's great. All right, this has been awesome. O'Hare, thanks for the idea. This has been a great room, one of our best. We're gonna do this again. I want to thank everybody, Dave C, Javier, Abe, Sohaib. I mean, there's too many people to list here. You know who you are. Some have already left. This has been awesome. There's a reason these rooms are the best rooms in FinTwit. It's all not because of me. It's because of you. I just try to coordinate these things. So we'll do it again. Everyone take care. Good night and be well. Bye-bye. Bye.
Good night, George.
All right. Good night.